Do I get in? Did I get out too soon? Is it buying opportunities? This is why you're here at the Cyber Expo, because we want to bring up some of the best and most popular gurus of the industry that have been doing it for over 10 plus years. So I don't want to take too much time away from Serge, but let me just introduce him really quick. I known Serge for it's got to be over 10 years now, maybe even more, actually. Time flies. But pleasure having hosted him on my podcast, where I shared some incredible insights that really resonated with our audience. Serge Berger, as you know, is one of the most disciplined and traders that I know for many, many years. And it's always great to have him back on with us. He's a head trader of the investment strategies at the Steady Trader. His background includes working with fixing income with at JP Morgan. He traded equities, options, futures, as also as a prop trader. He's also rule-based approach to trading, focuses on time frame and market structure. You also help countless traders cutting through the noise and trade with more clarity and confidence. So please give me a very warm welcome to my good friend, Serge Berger.
Hey, Fausto. How are you?
I'm doing great, Serge. How you doing?
I'm good. Can you hear me well?
I hear you loud and clear as always.
Very good. Well, listen, thanks for putting on the event. It looks like I've been getting emails, and it looks like it's great stuff as usual.
Well, thanks for having us. And you can start sharing your screen.
Yeah, let me do that here right now, and then we should be good to go. Alrighty, here we go. Yeah, I think you should be able to see that, huh? Yeah, perfect. Cool. All right. Well, thank you, Fausto, for putting on another great event, and thank you all for being here. I think, when we look at this market here in 2025, it is important to keep in mind that we really are looking at what I think is a trading year. Obviously, Fausto has certainly made a great name for himself, and has a wonderful education in all the trading stuff that he does. So I'm sure most of you probably do trading to at least some extent. And I think 2025 so far has proven to be nothing short of amazing for traders. Now, there are days when the opportunities are even better than other days. But that's what makes a trading year. So what I'd like to go through today with everyone is kind of build a little bit of perspective as to, what that actually means. What is a trading year? What is a trading environment? And more specifically, how can we take advantage of it? And so what we'll talk about is something called momentum. I think probably a lot of you have heard that term before, momentum strategies. Um, and uh, and that's exactly what we are going to be talking about here today. So just quickly, and Fausto, thanks for the introduction. I originally come from more of a investment banking background at JP Morgan, and moved on to the portfolio manager side, where I actually reside today as well uh, at Blue Marlin Advisors. But I also run the SteadyTrader.com, and which is educationally focused, and we help traders and investors to navigate through the markets in different environments using various strategies. And I think one of the strategies that not only works best, but is also one that resonates best, and people are able to follow very simply, is is something called momentum. And that's really what I'd like to talk about. Just quickly before we get started, though, the disclaimer, very important for compliance reasons. Everything that we're going to talk about here today is purely educational. So this is not meant to be any sort of advice by any stretch of the imagination. This is purely educational. So please take it as such. The year of the trader, as I said before, 2025, it is in full force. Again, I think April has been a testimony to that. And so far, the month of May is off to a similar sort of level of excitement, maybe not quite as much as April. We've been talking about the year of the trader since about early November, late October, October of last year. And we very much thought that we would see a very different market this year for a multitude of reasons, not the least of which being a new U.S. administration, which we expected would be giving us more headlines that, from a trading perspective, one can take advantage of. What we have seen is, again, nothing short of amazing momentum continues to rule the day. You look at, for example, April 9th momentum, right? So this is, for example, how April 9th went about. This is when we heard from the White House that they were going to put a 90-day pause on some of the tariffs. And on an intraday basis, here's what happened. We received a momentum buy signal, and I don't know, it was like 45 minutes later or something like that. The Trump news, White House news, whatever, on the 90-day pause um, hit, and the market was up 8.9%. Really quite remarkable. And, we typically narrate this in real time for our clients. But what I see is a lot of people are losing a lot of money by being emotional. Um, People typically are either frozen or they make rather chaotic choices. And so I think that is one problem that is actually quite easy to fix if we have the right process for it. But I think a lot of people believe that markets are too chaotic and too volatile to make real money right now. Um, I don't think it's the market's issue, because if that was the case, then nobody would be making money right now. And that's just simply not true. Tons of people are doing very well right now. So the issue is that people simply don't have a repeatable process that they can rely on. And so what I'll show you guys here today is a repeatable process. So let's talk about that. Um, Let me just move on to the next slide here. I think, volatility in the market is largely a function of momentum. And momentum is essentially a very repeatable pattern or a series of patterns. The movement is driven typically by computer algorithms, and those algorithms have a rhythm to them so that we can see what the next move actually is before it happens. Um, and that's very, very helpful, particularly in an environment that such as what we have right now. So I think it would be very beneficial for everyone to have a repeatable process, because it gives us peace of mind, so that essentially all we have to do is follow a system, for the lack of a better term, a process that gives us buy signals and sell signals um, in a repeatable manner. And so we can do that with stocks. This can be done with ETFs. We can do this with options and futures, of course. Or obviously the flavor of the day, once again, seems to be some of the crypto and Bitcoin stuff, where certainly the algos are very active in as well. But let's talk a little bit about indicators before we get started here, because we do want to look at this market here today as it is taking place and making moves right now. But I see a lot of people essentially just using one tool, whether we're in a bull market or a bear market. And the reality is that when markets are a bit slower, a bit faster, it is actually important to um, make a small adjustment. Um, Momentum markets aren't always as great as they are right now, but right now they are. And, we increasingly live in an algorithmically driven market. And so the more that continues and the longer that continues, the more momentum as a strategy will continue to work. I'll give you just a quick example here of like what's taking place, like literally right here, right now. This is I'm going to bring this over here if you give me just 1 second. This here, as you'll see in just a second, is the real-time chart of Palantir. The ticker symbol is PLTR, and here it is. So this is our momentum strategy. And again, this is a live chart right here, right now, 5 minutes of Palantir. And what you can see is that we received a buy signal earlier this morning, and so far the stock is up about 2.8%. It's already reached its free profit target, and we're now working on a trailing stop, which is represented here on this chart with this purple line. So we're in a free trade already. The signal has fired off, reached a free profit target, and now the momentum is working on a trailing stop. So one took this trade. One is no longer in a position to be able to lose money. In fact, one can only make money now. In this trade right now. Again, this is live in Palantir. We'll continue to update and watch how this unfolds here over the next half hour together or so. But what is momentum? Let's talk a little bit more about what it actually is. I think a little bit of a definition, at least my definition here, is in order. I do understand that some people have different definitions of momentum, and I think that is just a function of people having different time frames as their focal points. But momentum really is just a function of essentially what happens in the real world around us, which is a mathematical equation that the engineers among us here will probably appreciate. Essentially, it's a P, which stands for momentum, is the product of m times v, mass times velocity. So the mass of an object times its velocity. Now that we've geeked out on it, let me just give you the real world example. So this is the same thing, P equals m times v. So the mass of the car times its velocity equals the momentum. Now, as far as it relates to the markets, I have a slightly different take on it, but certainly based around the same basic idea. When we talk about momentum, essentially what we are talking about is an increase in speed, is essentially the way I look at it. So an acceleration. So let's imagine we're driving along the road in this blue little car here, and we're pulling onto the highway. And we're speeding up from, let's say, 45 miles an hour up to 75 miles an hour. And that increase in speed, that acceleration or that reacceleration, is what I personally refer to as a momentum in the markets. Again, that's my definition. I know some people have a little bit of a different definition on that, but that's the way I look at it. And the algorithms typically will focus on that delta, on that point in time, that change. Now, as a trader, and again, I'm going to make the wild assumption that at the Cyber Trading University events here, we have a bunch of traders. As traders, we are really looking, for the most part, unless we're doing income non-directional trades, for the most part, we're looking for directional moves. And so if we're looking for directional moves, what we're really looking for is momentum. But again, momentum is actually not something that stays. The thing about momentum is this. Momentum is it's not a constant. It's temporary, meaning it comes and it goes. So from a trading perspective, that's exactly what we want. We want to be able to get in, we want to be able to get out, and that's what this is all about. So the difference between momentum and a trend, again, my definition here, is the following. So this is a longer term chart of, in this case, I think this was the shares of Amazon.com, AMZN ticker symbol. And what you can see here is a longer term trend. From the lower left to the upper right, that blue line represents a trend. But within this trend, we have multiple situations where the stock is accelerating to the upside or accelerating to the downside. It's all happening within this trend, or even in trendless situations. There are always accelerations to the upside, to the downside. So you can see as this stock was kind of driving along at X speed, it decelerated and then it reaccelerated back up to speed. And that reacceleration as traders is really what we're looking at. And so when I looked at momentum for the first time really a long time ago when we were still working at JP Morgan, we had these side projects where we're looking at various different parts of the market. And what we found out is that a lot of momentum indicators, like sort of the traditional way of measuring momentum, is typically riddled with lagging signals that leads to late entries and exits, which in turn is just a function of false signals and then maybe more losses than we'd like. And these sort of traditional ways of measuring momentum, these traditional indicators, typically don't adapt very well or not quick enough in our finding to what we would classify as sudden market changes, right? So just going back to the example that I promised you we would follow together here for the next 20 minutes or so, is this example right here, right now in Palantir. Again, this is a live ticking 5-minute chart. We can use this on daily charts. It doesn't matter what the time frame is. I'm just showing you here something live so you can kind of get your head around it. And again, you can see we got a buy signal and we reached a free profit target there at those green dots, and now we're just trailing it. So I can no longer lose money in this trade. In fact, I can only make money in this trade because my trailing stop is this purple line. So we'll continue to follow up on this and see how it develops. Okay, so that's what's going on there right now. But let's talk about this a bit more succinctly so that everyone can see how momentum might be something that you can take advantage of yourself. So what we did, given this sort of challenge that we found that traditional momentum indicators have, what we did is we actually designed our own, and which really, it's an indicator, but really it's a process. And we've managed to make this much more real time using very specific parameters for more accuracy and just less false signals with some very, very straightforward rules. Essentially, what we're looking at with the trender indicator, which is what it's called, the trender momentum indicator, is we analyze price and volume in a certain way, and we're able to detect momentum. And so what it does then is it just gives us very clear buy and sell signals, including predefined profit targets and stop losses as the signals trigger. So why is this so awesome? Let's just go into it, and I can show you this here with real-time examples so that you can all get your head around it. So what I'd like to do is I'd like to just kind of show you a little bit here before we go back to Palantir, which of course is taking place in real time. Let's just maybe look at something like Ethereum. The ticker symbol is ETHA. It's an ETF. And I'll just give you a bit of an idea here. And you can see, for example, we got a buy signal here on the 1st of May at this point. That green arrow, at that point, it automatically gave us a free profit target. In fact, I need to quickly adjust this so you can see this a bit better, because this is actually using these settings. And so what you can see here is we received a buy signal. We have a trailing stop right down there. I'm going to quickly just, what I did here is I annotated this chart with this green arrow so you can see it. The green arrow is pointing at a little tiny green arrow. So this big one here is just me. This is my way of like being able to annotate, to look at the little green arrow. It's right there on May 25th. That's when we received a buy signal for ticker symbol ETHA, which is the Ethereum ETF. And you can see at the same time, the same day, it gave us a what we refer to as a free profit target. And let me take this down here so we can come back to it. So this is what's called a free profit target at those green dots. What is that, and why do we have that? So the second we get this green arrow, we also receive those green dots, which is our free profit target, as well as those red dots right down there, which is our trailing stop. So what does that mean? Well, it means if I were to, let's say, buy 2 shares of ETHA or two options contracts or two whatever, right? Or two Ethereum itself, if you wanted to, this is an ETF. I would want to get rid of half of it once it reaches my free profit target. Why? Because once I've reached my free profit target, it's going to be very difficult for me to lose money in this trade anymore because the trailing stop keeps going up. So as soon as I've reached the free profit target, I'm going to zoom in a bit more so you guys can see this very closely. So again, what we're focusing on is that little green arrow that I'm pointing at here with that big ass green arrow. And again, you can see it gives us, as soon as this arrow prints, this buy signal, and we get updated in real time when that happens, it also gives us a free profit target up there and a trailing stop. So I'm going to buy, let's say, 2 shares of ETHA, sell one of it up here. In this case, that was a 6% gain. And then I can leave the rest of it on using a trailing stop. And if you look at this very closely, and Palantir is doing very well here, by the way. We'll look at, we'll give you an update on, actually, let's do it right now. Palantir is now up even further. Again, you can see we got the buy signal this morning, the free profit target, and now we're trailing it with this trailing stop. So Palantir is now up about 3.4 or so percent since that. This is a live ticking chart, as you can see. But going back to the daily chart of the ETHA example, what you can see here is that we're also operating out with a trailing stop. So if I took that signal there, then I'm now on that second leg on ETHA, I'm up 45%. And, you know, you might say to yourself, well, I like to use options. I don't know how good the options are on ETHA specifically, but this can be applicable, you know, to anything. This might be Palantir, right? In fact, let's just have a look at MSTR, for example. This is, I know, a stock that a lot of people like to trade and be involved in because obviously it's a big mover. So MicroStrategy is one of those names. So I think this is the daily chart. I know we received a signal here a little while ago. There you go. So the latest signal, I'm pointing at it here with this green arrow, came on the 15th of April. And again, I could have bought, let's say, 2 shares or 2 call options or 2 call spreads, whatever I want to do. And when I do that, I would sell half of it here at the free profit. I call it a free profit target. I call it a free profit target because once I reach that point, I essentially can no longer lose money, right? Because I take profits, only have 1 share left or 1 call option or 1 call spread or whatever. And then automatically it turns into a trailing stop, which those red dots then turn into this purple line, right? So as soon as I've reached my free profit target, I can no longer lose money. And I'm then left with, let's say, 1 contract, or maybe I would have bought 4 shares of MSTR or 4 call options, and I sell half of them now. If I sell half of them, then I'm now only in 2 of them, right? Whatever it is, we like to sell half of it so we can no longer lose money. Now in MSTR, that signal can only make 25%. Like it can't lose money because there's a trailing stop right there at this purple line. So all I can do right now, the worst I can do is make 25%. Right? Does that make sense to everybody? So this is a very repeatable process using this. And of course, these signals happen in real time. So, Coinbase is another one, just since we're going through all this crypto stuff here. By the way, Palantir still working nicely, just updating you here on the intraday chart. Again, that signal reached the free profit target. It can now only make 2% intraday. Or if I would have bought a call option or a call spread or whatever, it can only make money. It can no longer lose money. It's impossible because we have a trailing stop there right now. Back on the daily chart, again, Coinbase, just to give you this example, right? Buy signal, free profit target right there. So the moment this signal prints, we get into a situation where we automatically receive a free profit target and a trailing stop. So we can no longer lose money. And then that purple line turns into the trailing stop. And if you notice this, notice how well the purple line holds as support. So once it breaks below there, that means that at least the market gets choppier or it may even start going in the other directions. Typically, we found a really good spot to start taking profits. So that's Coinbase. But we can even look at, let's say, Palantir on the daily chart. So Palantir too, this one actually received a buy signal on the 14th of April, became valid the next morning on the 15th of April. So again, the free profit target was reached very, very quickly in this case, because this is a volatile stock. The stock is now up 30, let's call it 35%, just to round up by a few basis points. And again, the worst I can do right now is or the signal is make 26%, right? Because we have this trailing stop in place. So, momentum is a very strong force, but what's important is to respect momentum when it changes, because at some point this momentum might change. And that's when maybe at some point we get a sell signal. Let's see if I can show you some others. United Airlines, I'm just trying to pick some stocks that I know everyone knows or can kind of follow. So this is United Airlines. Let's just go back a bit further just so we have a bit more data so you guys can kind of see what this looks like. And let me make this a bit larger. By the way, I do have a different screen resolution on this, so I might have to move the chart back and forth between here and the next one. So you can see the United Airlines buy signal from momentum on the daily chart in September, and it reached the free profit target. And then we had the trailing stop. Then we received a sell signal to go short and the trailing stop. And then we just had a signal just a few days ago. So this is a good example of one that is now stopped out. So this is United Airlines. We got a buy signal. It reaches the free profit target, 6% or so. And it actually just got stopped out yesterday. So again, I buy it there. This would have been my buy point. I make 6% on the first half, and I got stopped out on the second half for a 20 basis points loss. So net on this position, I made like 5.8%, even though it got stopped out. Right. And of course, I could have bought a call or call option. Yeah, the Palantir this morning actually did come pre-market, that signal. What I can do is I can take that signal once the market opens. That's the other rule, Lennon. But yeah, it was pre-market. I'm actually using extended hours signals here, meaning if I were to put this to regular hours, so this is now regular hours trading, meaning like the data is now only using regular trading hours. So we received a buy signal right there at 9:50 a.m. this morning, so about an hour and a half ago or something like that. It reached the free profit target very quickly, and now this position's up 2%. You see that, Lennon? And we've got the trailing stop in place. I like for some of these really heavily traded stocks like Palantir and Apple and Nvidia and MicroStrategy and whatever have you. I typically like to use overnight data as well, so extended hours trading, just because it matters. The world is a big place, and it's not just these stocks don't just trade. Once the U.S. equity market's open, so the overnight trading data to me does matter. It matters much less in smaller stocks or stocks that don't trade much around the world, right? But these for these big stocks, that's what I do. So hopefully that clarifies the situation there, Lennon. Good question and good eyes. I don't know, your eyes are not blurry. Yeah, back in the daily chart. So that's United Airlines. What about Tesla? Let's. I know I got a signal this morning in Tesla. So this is another obviously favorite stock, and again, this is one of those stocks where, I certainly like to use a pre-market or extended hours trading data as well. So I just down here changed it from regular trading hours to extended trading hours. So this is Tesla, and we received a buy signal right after the first 5-minute candle. So these are 5-minute candles. You can use other time frames if you like. I personally like to use 5-minute candles intraday. That's just the way I swing. By all means, use different ones if you like. But you can see we received a buy signal, becomes valid, I should say, the next candle, and so far Tesla is now up about 3%. It did reach its profit target very quickly. Tesla is a big mover. So you can see the free profit target got reached. So we got the buy signal, the free profit target gets reached up there. Let's say I bought 2 calls, or, TSLL, I think, is another stock that people like to use. Um, is that the levered version of Tesla, right? So let's just see what happened here. I'll quickly load. So this is TSL. There you go. So TSLL. So this is a levered version of Tesla, right? So again, this is a live chart. I'm not making this up. So buy signal right at the open or after 5 minutes, right? Became valid here, reaches the free profit target, and it's now using a trailing stop, which is this purple line. Are you guys all following this? Just quickly wanted to check in, just making sure everyone can follow this. And what I like about the process, the way I was taught about momentum, the way I've been trading momentum for God knows how long, is that it's very helpful to have these, again, I call them free profit targets and stop losses, because it basically allows me to not blow up, right? So again, let's just look at this TSLL example. Again, this is just a levered version of Tesla. Buy signal, and if I buy, let's say, 2 contracts or 2 ETFs or whatever you want to do, they're like $14 right now. Again, I can no longer lose money. The worst I can do right now in TSLL, based on this signal from this morning, the absolute worst I can do if I took the signal when it became valid is make 2.9%, right? On the ETF. One could, of course, bought options, a call option, call spread, whatever. I typically will use an at-the-money call option or something like that, using a somewhat short-dated option. This is just a day trade, of course. And then we have the trailing stop, right? So this is kind of how these running trades. Same thing with Palantir, right? This is going back to the signal that we have right now taking place in Palantir. It's the same exact idea, right? We get the buy signal there. We have the trailing stop, the free profit target, and the trailing stop. So that's how. What about Tesla on the daily chart? Let's have a look at that. That's probably a good idea. So Tesla on the daily chart, I have my arrow here so I can show this to you. We received a buy signal on the 25th of April, and we then are using our free profit target. So again, we used our free profit target to get out. So let's say I received this buy signal, right? So I buy 2 shares of Tesla, or 2 shares of the levered version of Tesla. In fact, let's look at it. I know a lot of people like to use these levered things, so I might as well show those to you. So there you go. So this is perfect. So watch this. So this is the levered version of Tesla, right? So you got the buy signal. So I reached a free profit target. Again, notice the trailing stop down there, the red dots, right? We never closed below it on a daily closing basis. And then you reach the free profit target on the 9th of May. And the worst I can do right now based on this signal is make 25%. That's the worst I can do. Dan is asking, what conditions are set for you trailing stop? Dan, that's essentially proprietary technology. I don't really want to give away my secret sauce, but that's why I'm trying to show you how it works, right? So this is how we like to have the process. And again, what I want to point out here is the importance of the free profit target and the trailing stop in combination together, because a lot of people don't do well in the markets, or maybe not as well as they could, because they don't have that profit target number 1 or free profit target operating with a trailing stop. Now, you see, using this approach with the free profit target and the trailing stop is, to me personally, in my experience of the past 26 years of trading, really only makes sense if we use a momentum strategy. If we use mean reversion strategies, that doesn't make much sense because they're not so much directional trades. So that's kind of that. Now, you might be asking yourself, what about the S&P 500? What about the Nasdaq 100? Here's the daily chart of the S&P 500, the SPY ETF. We could be using the SPX as well, of course. What I'm seeing here is a buy signal on the 29th of April. And of course, these happen in real time. So I would get alerted on the day of. We remain in a long position, meaning the signal remains valid, is I guess what I'm trying to say. And you can see the buy signal there becomes valid there. So reaches the free profit target. In fact, let me quickly adjust this. So it reaches the free profit target there. And then we use the trailing stop. Judy's asking, how do you use this with spreads? I'm assuming you're referring to options spreads as opposed to credit spreads or any other type of spread. So what I will typically do, so let's just use this S&P 500 example here, the SPY. In fact, let me just quickly go back and adjust this so you can see this a bit better. So when I receive the buy signal there, so becomes valid or became valid on the 30th of April, what I would typically do is I would buy the SPY, I would buy S&P 500 futures, I would buy a call or a call spread, whatever you want to do to be long the S&P, right? I typically, with option spreads, if it's a debit spread that you want to use, I typically will use an at the money debit spread, meaning, something like a $10 wide debit spread on something like the SPY. I typically don't use for credit for options spreads, which again I'm assuming that's what you're referring to. I typically don't use options that expire inside of 55 days because they're on the daily charts, but I only keep the trades on typically for a couple of weeks or so, 3 weeks or so maybe. And then we have the trailing stop in place. So that's how we use that. A lot of people like to use it with credit spreads as well, where they sell like a bull put spread below the market. We have a very specific rule for that that we use in-house here. Same thing for the Nasdaq 100, by the way, right? So this is the QQQ ETF here. Just for example, the signal that printed was on the 28th of April, and you can see that we reached the free profit target, and then there's the trailing stop. How do you find the signals? Yeah, so essentially what I'd look for is just the things that are moving in any given day, right? Like it's really not, we really don't make this difficult, right? So like, for example, every single one of you guys here probably has a broker, and just look for the movers of the day. So like, for example, today, right, I can see that Palantir is moving. It's up, a few percent. So that's what drew me to that stock earlier this morning. It's just a moving kind of stock. So in fact, let's check in on Palantir quickly, see what's going on. This is this trade that we've been following together here for the past 20, 25 minutes or almost 30 minutes now at this point. It continues to work, right? We had the buy signal and we reached the free profit target, and now we've got a trailing stop. So I typically have, like my charts typically look a little bit like this. I'll just make something like this, where I typically have the usual mover stocks. I have an Apple, a Palantir, a MSTR, those kind of usual suspects, including the SPY and QQQ on these. And then I'll see if there's anything else that sort of, pops up in my scanner. Again, just look for the moves of the day. Like if you don't have a broker, just literally you can go to cnbc.com and look for the movers of the day. Like it's just stupid simple. You want to look for movers because momentum is a movement strategy. Like that's what it is definitionally. So that's how I found Palantir this morning. Palantir is always a mover, right? Or most days it's a mover. So it's an easy one to kind of follow. But I do a lot of futures trading. I don't know. Does anyone here do futures trading, by the way? I'm just kind of wondering if there's any people in here that like futures. That's a big strategy for me, is using futures. So I do a lot of S&P 500 futures trading and, rates feed. I'm a fixed income guy by training at JP Morgan. I was a fixed income guy. In fact, a credit trader. But I do a lot of futures with this, be it gold futures, silver futures, equity futures, treasuries, a lot of them. Anything and everything really that's movement. Again, we're looking for movement is really what we are, is what we're after here with momentum. Um, what about the S&P? So like let me show you this. So this is the S&P 500. Remember, you guys remember yesterday? So remember, I think Fausto pointed to it earlier when we got started at the top of the hour. So this is, let me just quickly share this with you. And again, I have a different resolution on my other screen. That's why I have to this back and forth. But this here is the S&P 500, the SPY yesterday. All right, this could be the futures contract. I can show you that too in a minute. But this is the SPY. Okay, this is yesterday 5-minute chart. And I'm going back and forth between intraday charts and daily charts. It's all the same rules. So you can see yesterday, here's what happened. So this is the SPY. We received a buy signal, and you can see it didn't actually reach the free profit target. In fact, we got stopped out. So that first signal yesterday didn't work. So we received a buy signal, and then we essentially got stopped out for. Actually, no, we didn't. Actually, we didn't get stopped out. Sorry, I see that wrong. I didn't take that because I was in a meeting yesterday morning. But it didn't get stopped out because we held above the trailing stop, the red dots. But what ended up happening is we ended up not getting to the free profit target. So, but because we had a trailing stop in place, the buy signal, which triggered there, then ultimately stopped us out as we broke below the trailing stop. So it stopped us out for a gain, or stopped the signal out for a gain of about 0.3%. Then it triggered off a sell signal right there. That reached the free profit target right there. And then it worked on a trailing stop, which is this purple line, for the rest of the day, right? And then, of course, it closes out. At the end of the day, this is a day trade, so we typically close it out at the end of the day. Is this still making sense, folks? Just, again, all we're doing is using a repeatable process that has a built-in risk management system where we take this, again, I refer to these as free profit targets. That's just my own term. It just means I can no longer lose money. So yesterday afternoon, for example, when let's say I would have bought, 2 put options, or, shorted 2 futures contracts, whatever, right? I then get rid of half of it there, and then the rest uses a trailing stop, because I can then no longer lose money. Same thing with like futures, and it sounds like there's a bunch of future traders. So let me just quickly share this with you. Yesterday, what this looked like yesterday with futures. So it will look like the S&P, the E-mini, the ES, right? I'm sure some people in here watch that stuff. So that's how that's how it worked yesterday. So it's the same chart, right? Just like the SPY there. So again, we had that buy signal, then it gets stopped out for a gain, right? Because it broke below the trailing stop. And then we received a sell signal. And again, free profit target, and then the trailing stop, which is this purple line. That's it. It's as simple and repeatable as that. I do want to just quickly share with you or update you guys again on what's taken place in Palantir. So let me just see how this trade is working, or this signal, I should say. That's probably the more appropriate term. So Palantir, let me go to today again. What this looks like right now. It continues to work. Nothing really changing. So this signal continues to work in Palantir. But again, the nice thing is that we the signal became valid, and the worst that can happen is the signal makes 2.6%. And because it's a trailing stop, right? The longer the stock stays up, the higher my worst case gain is, right? Which is a nice position to be in, at least in my humble view. So, what this does, and you're probably seeing this, it adapts very quickly to market changes. And that's the way it's designed, is to adapt quickly to market changes, be that, to a new bullish run or a move to the downside. Same thing in Bitcoin. I don't know if anyone tracks Bitcoin, but It works exactly the same there. Now, if you're wondering where can you use this indicator, I'm showing you here at tradingview.com. It's just something that I use. It's not a recommendation, obviously, uh, but you can use it on other things like NinjaTrader, Thinkorswim, which is now part of Schwab, of course, Metastock as well. So it can be used in multiple different things. We we give people access to the indicator on an annual basis, and we typically include 12 months worth of trade alerts as well, and including specific process of how to use it with the trailing stop, the profit targets. We do a weekly live session, excuse me, a monthly live session. My apologies. And when we send out trade alerts, which is in addition to, of course, the indicator giving signals every single day and throughout the day as well. And I specifically teach people how to use it with options, how to use it with stocks, ETFs, and of course futures. That's also something a lot of people like to do. Um, as a additional bonus, what I like to do is I like to give people access to what we call the triple play strategy. So these are additional three strategies that we teach people. That one of them is a longer term strategy, one of them is a short term strategy, and then the other one is essentially intraday strategy. So we include that as well because we want to make sure that people are well rounded to have different strategies for different market environments. We include with this as well an actual trader's checklist so that you are not alone and you can do this in real time. We do live trainings. We just did one. The next one's going to happen, I believe, next week. So it's just around the corner, and we're looking forward to, or the week after next, actually. And we'll be doing live trading together on that. If you are looking for a momentum strategy, what I would like to do here is give you this offer. So this is full unrestricted access for a full year to the trender indicator for just $397. Hopefully you can make that money back in one little trade. The link for that, I just see that Fausto's team put it into the chat box, is thesteadytrader.com/trender. You can use credit card, and I think PayPal even allows you to finance that, I believe. But that's it. It's just $397, and you're good to go for a full 12 months using the trender indicator. Again, you can use it on multiple platforms. If you have any questions or concerns, you can also call 401-203-7389. That is possible as well. You can also get a lifetime access deal if you want to. Just give them a call. But we offer it here on a 12-month basis for just $397. You cannot install it on Fidelity. Fidelity, to my knowledge, and I could be wrong, doesn't allow installation of indicators, of outside indicators on the Fidelity platform. I could be wrong, but we've never been successful with it. What our clients do that use Fidelity, Stephanie, is they use Fidelity as the execution broker, and they use something like tradingview.com, which is just literally a website you can create a free account on. So to use the indicator. What's cool about TradingView, and I want to be clear, I'm in no shape or form getting compensated by tradingview.com for this. I don't even know anyone over there. I'm just telling you that this is a platform that doesn't require any installation. So if you want to use something, and again, it's free. So once you have the indicator, we give you access to it. So there's nothing that you have to install. This also gives you pop-up alerts. So if I want to receive an alert every single time Palantir or the SPY or futures has a new buy or sell signal, I can receive an alert either by email, by text message, or by pop-up on the screen. They even have an app you can install for free, and it pops up on your phone. So that's what I do. And yeah, and then you can execute that trade wherever you want, right? But that's what I do. Again, not a recommendation. There's no kickbacks here from this platform. I'm just telling you that's what I do. Of course, you can use it on Thinkorswim, and you can use it on what did we say? I think we have it on Metastock as well, and on NinjaTrader. Those are the ones. Yeah. Well, the signaling line here, Neil, is actually proprietary, so I'm not going to tell you that. Otherwise, like, what's the point? But the backstory of how this was developed was when we were working at JP Morgan, we had this sort of a side group, and we would develop indicators basically for our fixed income trading. And we were working on multiple things. And one of the things that we worked on is momentum. And we found that over rigorous testing over years and years, that this setup works really well for this, for momentum. Yeah, it's just 397 a year. There's no, like, you're not going to get charged more. So if you do 397, it's 397 a year. We're not, that's your lock-in price. You can get a lifetime deal as well if you want, Dan. I believe it's 1997. Just give them a call if you want that. That's over on over at this number. We just don't have it on the order form. So yeah. Well, the purpose of showing you this here for an hour is to prove to you that it works. That's why I'm literally showing you a real-time live chart of Palantir, right? I could show you something that's old, but I'm trying to show you something here in real time, so I can't fake it, right? That's the whole point and the reason of doing this stuff here in real time. I don't know, time is going to be up here in a couple of minutes, but I just want to quickly show you a couple of stuff on the things in the daily charts again, just so you can kind of see for swing trading. So here, for example, is the NASDAQ 100. Again, I want to just reiterate the importance, in my view, in my past 26 years of being a portfolio manager and trader and all the stuff that we do, is just the importance of having that free profit target. I call it a free profit target. Because of risk management. So, you've probably all done this before, right? God knows I have, where we get into a trade and then we end up giving it all back and get out at a loss. Well, that's not going to happen if we have a profit target where we close at least half the position, right? Because at that point, we can either no longer lose money or can only make money. So, the signal that became valid on the 29th of April, the worst that can happen now is I make 6% on the NASDAQ 100. And the more it goes up, the more, the higher my maximum potential, my minimum potential gain is. Yeah. Yeah. So I'll teach you guys this. And, we always do our member sessions. We do it once a month, sometimes even twice a month. I will teach you exactly, Stephanie, how we create the watch lists. But really, like I just said before, like, it's really just a matter of seeing what's moving. So, I'll give you a whole bunch of stocks that we like to watch every single day, a whole bunch of ETFs, and I'll show you what the movers are. But the SPY, the NASDAQ 100, the QQQ, the leverage versions of those, the futures, the big name stocks like Palantir, MSTR, NVIDIA, all those things are always ones we tend to watch, all the time, just because that's where the movement tends to be, the momentum, at least now. And of course, momentum changes over time, right? I will tell you right now, I think at some point later on this year, we're going to have a lot of momentum in entirely different sectors, particularly in the energy sector and the materials sector. That'll happen in my view. So we're prepping for that already. In fact, we are seeing that the silver is starting to make big moves. For those of you guys that like futures, I can just give you this quickly, and then I'll pass it on to Fausto. I don't want to overextend my welcome since they've been so gracious with having us here. But here, for example, this is Think or Swim, just in case you're wondering. So this is silver futures yesterday. We got a sell signal. Actually, this is today. Excuse me. This is this morning. Silver futures got sell signal, boom, and then a buy signal. This one also has our extreme overbought oversold indicator on it. So that's how that works. Judy, I'm actually not quite sure, but what you want, just give him a call, our team, 401-203-7389, and maybe they can make that happen for you. 397 a year is like a ridiculous price. So it's not going to get any better than that, but yeah, just give them a call and see what they have to say. Cool. Thank you, Tom. I appreciate the comment. Tom says, thanks for sharing the momentum indicator. Excellent. Well, listen, I'm going to pass it on back to Fausto. And Fausto, I hope I didn't overstay my welcome. I'm actually not quite sure how long I have, but I would imagine we're roughly on schedule. So
No, that's fine. That's perfect, Serge. And thanks for being here, everyone. And like I said, now you see why we had Serge come back all the time, and he was on my podcast too. If you want to listen, remember this is going to be recorded, and take him up on his offer. And like I said, if you also want to see the interview I did with Serge, definitely go check our YouTube channel because it was a lot of fun. But Serge, I look forward when you heard you coming into town. When you are, let's hang out. I know where you're in Switzerland right now.
Yep, just got back from Florida. I was actually, and this is admission. I actually was in New York, but I was there so quickly, Faust. I was literally just 3 days. But
No, it goes
I
fast.
promise next time I'm
That's
coming out,
okay. That's
coming
okay.
out to the island.
That's fine. Well, thanks for coming, Serge. And what we're going to do really quick is we're going to take, we got about 3 minutes. So we're going to have Jay Trader, Joseph, and another person from Europe that's logged in from Italy, and another great trader. And I had him on my podcast. We'll have him in just about 5 more minutes. I want to basically just share the screen with everyone, just share what's going on in the market. So let me just share my execution system. So there are a couple of things that are moving in the market. We had a little bit of a crash yesterday, and the market took a very, very big hit. You could see it here when that news came out with China and the whole chip thing. Things came crashing down. There's been some really good opportunities of buys right now. There was some other stocks that took some very big hits, and I know which is going to really be cool is that when Joseph comes on here and talks a little bit about level 4, which we also know as Bookmap. We use it very, very frequently here at Cyber Trading University. So just want to kind of show you really quick. So they're looking at the stock right now, Wolf, and it's making a big comeback. And I just want to show you something really quick before. Wolf, there we go. All right, so Wolf took a very big correction the other day. You could see it drop from like $3 all the way down to a whopping 80 cents. Oh my God, that is devastating. But it did make a little comeback yesterday. We're very big fans of bottom fishing. You can see it's at 120 to 160. And I'm just going to bring up over here level 4, just show you what we got going on right here. And you could see that there was some iceberg orders that got filled here at $1.50. His stock is going higher. They are actually trading it in our trading room. You could see it right here for some of you that are members. And also, you also have access to be a trial member. You can see everyone's logged in all over the world, but they've been actually trading Wolf right now. It's been doing pretty well. A couple of the stocks also they've been watching. Obviously, you heard that Serge was talking a little bit about some of the brand name stocks like Tesla. We trade Tesla a lot. We trade TSLL. We have a strategy how we trade that, but you could see some iceberg orders hovering here right around the number right here. Oops, sorry about that. We got some iceberg orders hovering right around here, around 45, and then 50, and then 55. So some big resistance levels right there. And you could see here when we look at the Tesla trade right here, TSLA. There's our iceberg order right there. So just be prepared. Just be prepared of those big block orders. All right. So let me do a quick intro really quick. So let me just pass this on and minimize this and bring back up here and bring in our next speaker, which I'm very excited to bring on because here's somebody, it's the first time that he has been on our Cyber Expo. I got a great request when he was on. I actually was introduced to have him from Bookmap, and he's got a very big Discord channel. I've been trading for, very good trades exactly very similar to the way I trade. So not more just the indicators, everything else, but has traders that work in his office, everything else. So he's been, it's a pleasure having him on my podcast. He's been trading, I believe, almost 20 years now. He built a very, very strong following by helping traders around the world, developing their discipline, the skills that they needed to succeed. Knowing in the trading world as J Trader, he basically is out of Italy, and he trades live every day with students across multiple time zones. His room is all about real-time learning, and he especially knows for using tools like Bookmap and direct price action and teaches with a passion. Um, so if you're serious about level up your trading game, and this is someone you want to pay close attention to, let's give him a warm welcome. J Trader Joseph. Joseph, welcome to the Cyber Expo. Do you hear us loud and clear?
Good morning, everybody, and thank you for having me over here, Fausto. Really, really interesting today. I was listening to Serge, and I think that he made an amazing exposition. So thank you for being over here.
Well, thanks for being here. And once again, let me stop and you could share the screen on your own. There you go. Stage is all yours.
Okay, let me know, traders, if you can see the screen.
Yes.
Okay, so thank you, everybody, for being over here. I will jump in fast presentation, the first minutes over here. And then I'm going to go over into the playbook. Today, I'm going to explain about what? About raising your edge in trading. And this is basically comes from two things that I have. One is the order flow, so the reading of I would say the level 4, like Fausto was saying, and also the creation of a trading system, so a precise trading strategy that I use. A few things about who I am, so that just want to introduce myself. So I started trading in 1999, and I was working with some of the serious brokers over here in Italy. Actually, this just like, it's funny to say, but tomorrow I'm going to have a live trading in front of in Italy. Okay, so a live trading in front of a conference. And the same brokers at that time, 20 years ago, they will
Service,
be
please.
like joining me tomorrow. So that is a good thing. So I study everything out there. I've been like learning from different mentors, but at the end I needed to simply have my strategy. And how I did for my strategy, I simply started, guys, to backtest everything the market was giving. So I was like tracking everything out there because I think that the data is one of the most important thing. And for this reason, I started like collecting first of all data and then making a playbook. Why I built the system? Because I was having losses. Okay, because the market is changeable. Because after the market came in 2008 with the rise of the algorithms, the hedge funds, and everything, the market was not anymore like simply tradable like it was in the beginning, where you were trading against the market maker, which was a normal human being. All right. After 2008, after Lehman Brothers and everything, market became much more unpredictable. The algorithm became like much faster now, even with the arrival of AI. I think the retail trader will have still like even more difficulty to become successful. So if the machines, okay, if the market is becoming so more difficult now to trade, you have also to step up your curve of learning. And why trade stocks, futures, and options? Well, because I believe in diversification. So I believe, first of all, in investing. I believe that if you keep the money in your bank account or under the bed, your money won't be worth nothing in about 10 years. So inflation, all this stuff. So you have to invest in the correct products, but also there are different products, different assets, so that you can minimize the risk. And according to the, I would say, risk aversion that a person has, you can simply, I would say, find your best choice. Building an edge, what means? Well, what you see over here is an app that I created with my partner. In this app, I backtest, I test, I experiment, and I track the market. Okay, so if you tell me how many times Nvidia on the earnings in the last 14 years or Tesla in the last 5 years had a gap up and how much it came down from the open? Did it dip and push up to the upside? Did it held the VWAP? And then how much percent is extended from there? Well, with this, I can simply have those stats. So you will see, for example, some of the pattern that you trade, sell the new scenario or buy the dip, or like what the general FOMC do when we have these kind of stats coming out. This is the kind of information that I need to have in the market. All right. So that's the reason why I use this app, which is a software actually, every single day. And we give, each day in screen share. The result came with the build of a trading system, or actually, I would say even better, improving what I was already having. This required a lot of time. One thing that I want to tell is, and this is Theophrastus, is a philosopher of Stoic philosopher. He was saying, time is the most valuable thing a man can spend. And it's so true. So I put all my time in creating this with my partner, he's a coder, okay? So that now I save my time when I trade. Because right away, when I see this morning stocks or futures, okay, let's say Tesla, SST this morning, BON, so some of the biggest gap that we had, I need to know if these stocks had history of fading, history of running, if they were like solid in the past, if they reject the pre-market high, if they had breakout and extend. All of this information for me is like critical, especially to, I would say, project a forecast. Then, of course, you always have to know like the setups, patterns, the order flow, the tape reading. There's no like secret. So what I'm telling you today is something that I've been trading. It's something that, again, if you're in Italy tomorrow, come to see me because I will trade live in front of 200-300 people. And I will explain now in 2-3 minutes how is based the strategy. Okay, I would say the not all the secret sauce, but the main frame, the blueprint, chart indicator setup. Okay, so for me, the first thing that I learned in trading is that we have a price action and the volume. Those are the first two things. So price action, when I say price action means, like it could be Elliott, could be like the Wyckoff. So higher lows and higher highs, lower lows. When I say volume, I mean also supply and demand, but also the read order flow in the tape. Because we need certain, I would say, metric for confirmation. Chart indicator setup. You can trade off, and I'm trading mostly intraday. You can trade off the 1 minute, the 5 minutes, or the 3 minutes, the 15-minute chart. But over here, I just share something that is like, I would say, common for the majority of traders, which is the 5-minute chart, okay? So 5-minute chart, let me get over here, is made by 5 major indicators. One is called J-lines, which is a 14 and 17 EMA. Then there is J-lines 2, which is the medium band. And then there's like another band called the J-lines 3, which is the slow band. Now, all of this, I call it J-lines, J-lines Joseph. That's not difficult to hear, to understand. But you will see that especially the 14 and 17 and the 7289 are going to be like magnets of the market. Often this magnet will be point of intersection with the fibs. Why? 89 is expansion number of Fibonacci. And from there, you can also get the 14. Another thing that I use is the VWAP. Because why? It's not because VWAP is right now the most reliable indicator to trade from, but because you have to know what the other traders are looking at, okay? And you have to know that if everybody is buying breakouts and everybody's like shorting the VWAP fail and everybody's shorting breakdowns or whatever, you have to know that it's not only me and you that know this information, but it's also all the market, the hedge funds, the institutionals, the algorithms that say simply, I would say, study the market, study our behavior, study our psychology in order to simply trap us. Okay, I don't want to say worse names. Sometimes I curse, so Fausto said, please be polite, and I will. But the point is that you're going to simply get killed if you follow what everybody else is doing, okay? When Fausto told me to participate today, the first thing I say is that I learned through losses. I lost a ton of my life. I regret so many things in my life, but all these losses, and I still lose sometimes, okay? Maybe 1 month I trade bad and then 3 months good. But what I learn is that every time I have a difficulty, every time that I'm losing, every time that I have like a major, I would say, big loss, I try to learn from that. Because if we don't learn from our losses, if we don't have that particular, I would say, dedication and resilience to improve and understand our losses, we will never get better traders. Okay. And by the way, I'm not here today to make any kind of publicity. I'm here because I have a huge respect for Fausto. And I think we share the same kind of origins because he's Pugliese and is a surname. But this is funny because Pugliese means from Puglia, is a region in Italy, which actually my grandpa comes from. So we are both like with Italian origins, and that's amazing. So getting back to trading over here, I like a lot two type of market scenario, which I believe they are the most common ways to trade and also base your algorithms. Okay, one is the trend following, one is the mean reversal. Now you will see often that the trend following trades, generally, they will have a lower win rate than the mean reversal. But the trend following strategies, they generally have much more R return, so profit factor, versus the mean reversal. So what does it mean? Maybe you will have a mean reversal strategy that has 80% win rate, but it will be maybe 1 or 2 R, okay? So you risk one to make maybe 1 or 2. And instead, the trend following has generally between a 30 and 50%, win rate. But when you win, you can win even like 8, 10 times, more of what you're risking. In this case today, we're going to talk about one strategy. This strategy is called J-line system. Basically, what it do? You short when the 1 minute J-lines is below the J-lines 2, J-lines 3. You long with the 1 minute J-lines above the J-lines 2, J-lines 3. And you will see everything aligned. Now let's pass to example, but I can tell these examples are not like, caught the perfect example because I don't want to share the stop losses, okay? That's ridiculous because if you trade one day with me, you'll say, there you have a stop loss you didn't say about it. No, every day there are stop losses, but I've been trading 25 years. I have a room 7 years only. Before I was trading this full time for more than 15 years, and for more than 15 years, I made a living in trading, okay? And also help, I would say, right now, thousands of traders to become successful. This is yes. So the system can work on crypto, but I don't like it. So I only traded Bitcoin. Can work on Forex, but I was never that profitable. In futures, yes. Okay, I started with covered warrants in Italy and futures, European future, FTSE, DAX, FTMIB, that I still trade, and also US stocks a lot and Italian stocks. So you can see that the first bar over here is a trend bar breakdown. Okay, we know that it's almost like a beautiful flag play. We can see that the bars are red. So the bars are red when the price is below the red line, okay, the J-line's fast. And you can see the J-line's fast is below the J-line's medium and the J-line's slow. What does it mean? It means that the trend is bearish, mean that I don't have to trade for any kind of reversal, mean I don't have to try to buy the dip, okay? But I need to stay short with the market, okay? Short with the market. So in this case, you enter in the first red bar, then you see the cloud over there, the band 9 and 20 MA. You can simply trail all the way down. And then when we break that J-line's fast upside, you get out of your position. This is a beautiful play, and I will love that the market is simple like this. Everybody will make a lot of money. We're all gonna bring our husband or wives or whoever in holidays, have like beautiful houses and whatever. But the point is that the market is not always like this. The market is also like choppy, like was, for example, yes, in the first 2 hours this morning. The market is also like trend, like, for example, Tesla was this morning, or SST, if you trade the small caps. So there are different variations of the strategy according to what kind of market you have. This is the overview of the system, okay? So first thing you have to do, imagine that I don't know anything about trading, okay? Always set key levels. What are the key levels? I wrote over there pre-market high, pre-market low, because they're essential. If you trade futures, I will take, every broker has different pre-market high, pre-market lows, okay, according to which broker you have, or according to which chart software you have. I would say that from midnight or from 4 o'clock. So pre-market high, pre-market low, weekly low, but also previous day high, previous day low. Those are my 6 major key levels. Then we have also the daily levels, okay? If I tell you 200 on Tesla, or I can tell you 6,000 on ES, I mean, you don't need to be a genius to know that these are the key levels, all right? Major magnets Volatility tools, ATR to size position and set adaptive stop loss distances. Okay, volatility tools is very important because you want to trade a trend following when there's like volatility and there's liquidity. Because I can tell you this morning, and now ES is breaking out. I can tell you this morning that GME was pushing up. The volume for me was not good to trade it. I can tell you PLTR as a beautiful instead breakout this morning and trend and the volume was clear. Tesla the same. So I will focus on those stocks that have an increase, okay, versus the previous day or days in terms of volatility. Okay, volatility means range and liquidity. Okay, so the volume. Trade management, dynamic stop loss based on EMAs, J lines, key daily levels to protect the profits. How many times we are in gain? Maybe we take 3-4R, we don't take the profit out because we don't have like, Serge was saying very nice. And I think the guy is very smart. I want to meet him. And he was saying, for example, you have the first target and then the second. So, and it's true, you have to get paid. Otherwise, what happens? Sometimes you don't have the target. So you know only the entry and the stop loss and comes back. And now you say, wow, it's a stop loss or it's like a trailing break even. And that has no sense. Okay. So don't do that. Always have traders, trust me, always have a kind of stop loss and always have a trailing. Then there are entry triggers. Okay. So these are important because there are patterns actually. And these patterns are, I would say, filtered with bookmap. Okay. So with the order flow and setup conditions. Let's go to the next because I need to show you this so that you understand. Let's go into this. This, guys, is the short scenario, okay, we've been talking about before. Two main things that you must know. So if I'm looking to enter in the market and the market is still inside the previous trading range, okay, I'm not looking to trade anything there. Or at least I'm testing maybe the market with a start or with a feeler. But the best position come if we are outside the previous trading range or near the high or the low of the previous trading range, because that is the zone or the zones where you can have actually the possibility to have a good trade coming. The entry timing, okay, let's say we're looking for a pattern, could be a bearish candlestick pattern, bear flags, bull flags for the long, breaks of micro crop trends, order flow, wall of sellers. So you will see something on bookmap, and then trail with the 90 MA, trail with the J-lines, trail with key level. Variation, the lower win probability. For example, if I'm looking to short, okay, and on the short side, I'm going against to the VWAP or I'm going against to a big daily support. Well, it's better that I wait that we breach that level before taking a trade. So I will enter, for example, a pullback. What to avoid? Range trading, okay? Because range trading, you will trade it when you trade mean reversal. Today we're talking about trend following and low volume setups. Because when you have trend following, you cannot simply trade without volume. That's the error that the majority of newbies do. And they see the pattern, they see a bull flag, they see a cup pattern, they think, wow, this is a beautiful trade. In reality, if you don't have volume, you can have the best bull flag, the best cup pattern, the best pullback of your life. But if there's no volume, you cannot simply trade it. Let's move on. This is the setup that I want to go over, okay? So the one we saw before. In this case, now you can understand. We have a breakdown on the trend bar of the flag. You have the 9 and 20 MA like it's holding all the way down. You're trailing with the J-lines fast, but you're still like in a short, I would say, scenario because there's the J-lines 1, below J-lines 3, below J-lines 4, 5. Okay, so J-lines fast, below J-lines mediums, below J-lines slow. These are all like bands. This is an example on NVIDIA. This is an example that we had in pre-market. So you can see the support of the previous day. In this case, you already see that from 7 o'clock, all right? So from 7 o'clock, the pre-market over here is having a breakdown exactly over here. So that's already for me a great, okay, spot where start taking a feeler, even if it's pre-market. And then 8:30, we have an A plus setup. Okay, 8:30, remember, it's 1 hour before the open. Why? Because often the market seems right now, in these last weeks, that is having much more liquidity. Okay. So with all the, I would say the thing of the tariffs and everything, we have so much more liquidity. So these are perfect pops. This is a setup that we see almost every day. It's a moneymaker setup. And when I see this play over here, often I will have this big rejection. This level over here that I'm tracing over here, the marking is going to be with a big heat map. And then bear flag all the way down, all the way down, all the way down. And we're going to have actually sometimes what is like a capitulation over here. Okay, this is the open 930, but it's also a fake breakdown. It's a liquidity trap. It's a capitulation 930, and then the price goes up. So you can see again that we're shorting the market. We are trend following. The J-Lance 1 is below the J-Lance 3 minutes, below the J-Lance 5 minutes. The market is going all the way down. Okay, and we're taking our trade. Then at the open, we have this fake breakdown. This is a liquidity trap that we see. So until we are in this zone, I don't want to trade. Once the strategy over here, the system is turning into blue, well, we can start looking to buy over here dips and then looking for an uptrend. Okay. Essentially, if you look in NVIDIA this morning, if you look at this NVIDIA, but you look also NVIDIA this morning, if you look at Tesla this morning, they made the same exact thing. This is an example from 3 weeks ago. Well, this morning is exactly the same. If you have questions in the meantime, feel free to reach out because I'm happy to help. This is, okay, Google. So Google today also gave an A+ setup on the long side. This is an A+ setup on the short side. So we're talking, as I said, of liquidity traps and then trend following. This is another pop. You can see over here that we have the fake breakout of this level. This is the pre-market high. And then we get into this level down here, okay, which is a pre-market support, pre-market low, this red line. We break it at the open. This is 930. So if you're fast, you can take that. But also, I can tell you that I generally tend to wait the first 10, 15 minutes out of the gate because I need to see the market, what it's doing. So the market is often full of algos at the gate. They make to trap. There's a lot of liquidity. There are like big hands, both sides. So that level over there for me is not really the best play to trade it. Okay. So I will be waiting often for a play that is not at the gate. Okay. So have patience. You don't have always to trade at the gate. Have patience. Okay. That's the first thing. The second thing over here is that you have to look for a pullback. This is your pullback. Okay. We see over here the shooting star. Shooting star, the system is all red. So you can see that we're below the band. Yes. The next bar becomes my A+ setup. Okay. So if you didn't short the open, you will enter over here in the pullback. You place the stop just above the J lines up here. And then you're looking for this unwind. Okay. And again, you will need to have targets. So one of the key rules and that I use is that if I'm risking one, at least on these trades I want 3.5, 4R. In this market, I'm gonna stay with almost 4R every single trade. Okay, so the system has a high win rate, and even there, if they ask you, give me a win rate at your system. Oh well, depends from the first of all the stock that you're trading, the asset that you're trading, because it could be futures. It depends from if it's long or short, depends from the scenario in the market. Because if I tell you, so that's the reason why you have to be smart. If they tell you, oh, the system has 60% win rate, okay, 2020 was everything bullish in 2024, but 2025 or 2000, for example, 19 or 2022. So every single year is different. Okay, so you have to find a metric correlated to that kind of market scenario, and that's your short play. Even here, we go down, we write all this with the J lines, okay? And you stay in for all this move. One thing that I will often call when I'm trading, so these pullbacks, these zones over here where you see another short setup forming around 162 and 60, and then place a stop loss, because if we have a big trend to the downside or to the upside, look for those pullbacks because those pullbacks are money makers. So if we have enough liquidity, if we have enough volatility, That is your short play on a trendline break, or if you have bookmap, you'll see key levels over here of liquidity where you can simply short, almost pinpoint the entry. Sometimes, and Fausto, for example, when he shows you bookmap, sometimes you'll have entries on Nvidia where you risk maybe 50 cents, 60 cents, and it's incredible, okay? Or maybe even less, 20, 30 cents, because you have certain levels of liquidity where you have, for example, wall of sellers, and you simply short before that liquidity or as soon as we reject from that liquidity. So that liquidity becomes your risk. Another example. So this is KIDZ. Okay, we're talking about a small cap. We're talking about also stock that in these days is really moving so much. There's a ton of attention on KIDZ. It's called class over holding over here. This stock has a lot of range, so in a day it can move even 30, 40, or even 50%. We can just see over here from almost 11 went down to 650. Okay, so lost like between 40 and 50%. I think that they even failed more. But over here, I want to show you what happens when during the morning you have like an uptrend. Okay, so everybody over here is bullish. And in this case, you don't have to short the market. You're going to short the market over here. You're going to try to get the top, and you're going to simply get killed. Wait that the market shows you that we have that reversal. So you start looking for the price shifting below a trend line. You can see this black line over here. Once we shift below, it's not, oh, I'm shorting over here the market, because that happens like this. You cannot simply short the market because we have a breakdown. How many times you shorted the market because you had a trend line break, and how many times you simply got killed, right? So you can trace many times. And I tell you because I know that as traders do. I mentor traders every single day. This is a trend line, then you can make a trend line. Maybe we add another trend line and so on. And many times you enter in the breakdown and again goes back up. Remember, the market, the algorithms that are in the market are doing this on purpose to trap you and then squeeze you up, or vice versa for the downside, okay, with fake breakouts. So it's not the simple market of 20 years ago. Market change, adapt. This is that moment the market shifts, the moment that we have a clear trend change. And that's the moment that I like to enter. The same strategy, I use it for the swing. The same strategy, I use it on an hourly chart. The same strategy I use for daily charts. This is over here my stop loss. This is my trend break, and that's where I want to get in. And you can see each bar is making lower highs, lower lows. So means good level over here of, we say, of selling off this 840. Another thing is the follow through. And these follow through often are really the, I call the stair step down pattern that you will see with order flow, where you will see the order flow. So where you will see the level 4 that is doing actually like this, okay, like this. So imagine that you see the tape, okay, you see the level 2 in the times and sale, they're doing like this. So you see it visually. Visually, it tells you that we're going down. Visually, it tells you that over here we have a huge amount of sell-off. Let's move to long scenarios, because right now we spoke about short scenarios. And why are we speaking about short scenarios? Well, yesterday we had the proof. Market dumped, so we had the data, and I want traders to be prepared for the possible, scenario. You're still not on a long-term bearish in the market, but this market, for this market, you have to be ready to everything, because this market is not only depending on your technical analysis. If you think about that, good luck. This market is depending right now on tariffs, on macroeconomic aspects. We use technical analysis, we use like our trading strategies to have an edge against the market. But the market is not that me and you decide it. Nobody decides the market. The market decides itself, and the market now is based on news and macroeconomics. Okay, that's the first thing. The second thing is, if you want to trade, don't only look at your strategy, but always be informed what's happening in the market. Open an X account looking at what Trump and Elon Musk tweet. Open an account to see, or use, for example, any other kind of news to see what I would say China is putting out every single day, Europe is saying every single day, because all of these news that we have are simply manipulating away or not the market. Long scenarios. So we said that in order to trade long, we have the J-Lens 1, sorry, short, J-Lens 1 below the J-Lens 3, below the J-Lens 5. Okay, over here I call it the J-Lens 1, 2, and 3 is the same. So 1 above 3 above 5. You're looking for a stock or a future that is above the previous trading range or near the previous trading day session high. We are looking for a stock or a future that is above the hourly J lines. Actually, today, all were like tested. ES and Q, RTY, SPY, Qs, Tesla, Nvidia, Amazon, Apple, every one of these dipped on the over the hourly J lines. Entry timing. Before we were looking for bearish patterns, now we're looking for bullish patterns. So bullish candlestick patterns, bull flags, break of microtrend, and reclaim order flow wall of buyers. Trade management. Something that I really like is the use of the 90-MA, especially if you're trading with the 5-minute chart. The 90-MA has a very, very important over here rule. You're looking for higher lows, you're looking for J lines, you're looking for key daily levels. Variations, as we said, do not trade, or you know that it's much riskier trading against the VWAP or against a key daily level. Avoid range trading, okay? And low volume setups. As we said before, without liquidity, you cannot simply trade. Let's look at some of the plays that we had. These are plays that we actually traded in the room. So what I do is I make a watch list. I trade, a screen share I traded, and I comment, looking at my screen share, what happened. So it's not that I'm trading discretionary. I'm trading a strategy, a system where you can simply know the rules. You can see how I do it, and you can actually do it on your end. I think that in order to be reliable and successful, you have to know exactly what your mentor is doing. This is an example on Tesla, okay? Happened this month. We know Tesla, that in the first few minutes out of the gate, often it goes up and down, up and down. And a lot of traders get caught trying to trade it. So the first thing that happens 9:30, we have what we call over here a shooting star or doji, okay? A shooting star. This is a candle of indecision. So if you tell me, I don't know, if I see this chart over here and I see the candle, I have a 50-50. But how I'm lucky, probably I will have like 30-70 down right. So I don't know how to trade it, and I have to wait. The system is telling me over here potential long, but it's an indication. And then it tells me long it. But still, sometimes I know that I need to have something more, like the order flow. The third bar gets to the previous day resistance, and it forms another shooting star. You see this little wick? So this little wick means that we have sellers at the top, and the wick, okay, compresses the body. The body gets very narrow, and that means indecision in the market. The next bar either is another doji. It's like a small shooting star. So when we have generally a shooting star over here at the top of a trend, we expect this to go down. And what happens? It goes down. Now we'll reveal one of the setups today and go do it after. Okay, don't take what I'm saying for granted. Get informed, experiment, study. I tell you this, go check 5 stocks, Google PLTR, Tesla, ES, QSPY. Today the system had 5 big wins, okay? Using the same setup I'm teaching right now on the 3 and the 5-minute chart. You can use even the 15 minutes. But if you look at the 3 and 5 minutes, it's exactly the same pattern with really no difference than how. So you will see over here that the price compresses, okay, here. This is a compression of the liquidity. So it's what we call often a pennant, what we call often a flag, or it could be a wedge. Okay, so you can see the price when it's pulling back over here into the J lines. J lines are blue. This is like getting over here less volume. And then we have this little burst in volume. The system alerts long. And over here is like my first start of the play. The confirmation is on this bar. And this bar tells me that the system is confirming with all this volume. You can see all this bar. This bar is almost no red at all. It means that the majority of the participants in the move of this moment are buyers. That is a confirmation. That's my load the boat scenario. That's my go all in. I place the stop loss, which is the most important thing. And the next most important thing for me is to reach to the first target. Okay. First target that I generally look for, as I said, two major things. One is if I'm looking for an entry with, let's say, 50 cents risk, I'm looking for a $2 generally profit. So I'm looking in this market for 3.5, 4 hour return. I risk one to have at least four. Okay. At least with 1/3 or half position. But until these candles stay blue, I'm not selling. And that's the first candle out here. Okay, so this trade went like, I think 8 hours, something like that, altogether. So over here, I'm getting out 1/3. And then you can see that the bands are still blue. I can still hold over here. I can actually re-enter. This is another A plus setup. Micro consolidation. What happens in micro consolidation, like we said before, volume, okay, gets narrow over here. There's a compression of volume, then a burst in volume. The majority of this candle over here is blue again, and I can trade. One thing to tell you. Personally, if I take this trade, I'm only gonna re-add what I covered before, what I sold before, because it's also lunchtime. And the more we go into the lunchtime, the more you go into the territory where the volume tends to decrease. So the liquidity that we expect in the market, okay, is not gonna be like we had in the first 30, 45 minutes. And then up here, we break the J lines and you get out. Okay, so it's very simple. So imagine that you have a first push, you have a dip. The dip has to be a compression of the volume, and then there's the burst in volume, and the price has to stay with the J lines. And you have to have this. The system over here is automated. Okay, so this is a bot. It tells me to enter. I enter and I follow what it tells me, but always knowing that I'm behind the screen and I can manage the trade as I think is the best in that momentum, in the moment. Because it happens, for example, that I'm long, president or whoever comes out, you know what, guys, we're gonna make tariffs to China to 200%. Boom, market goes down like 200 points or whatever. Okay, so you have to be ready, and that's the reason why I still think that the human being behind the screen is very important. Okay, AI is still not there. It's still not there, but it will get there. This is PONY. So if you trade small caps, something that I can tell you the truth, I found at the beginning very hard to trade, not because the I found it very hard to trade them because the manipulation that are behind small caps is very different than trading futures from where it came and trading European equities. Manipulation that we have in small caps is that high that often these small caps can print 200-300 million a day or even 500 million in a day for a $5 stock. The stock can go up 500% in 3 hours and lose 80% of what it made in 1 hour. So that I tell you how, I would say, itchy they can be, but also very remunerative. Okay. So how to trade them? First of all, you have to track them. You have to start very small, make your account, take 100, 200 shares to practice. I don't suggest to go in demo because everybody in demo is a super king. When you start trading live, the emotion play a bad role. So this is the first bar. As I told you before, the first bar is always the bar that they simply trap you. And again, you could see one thing. Doji shooting star. So I don't know what the market over here is going to tell me. But when I see this bar dipping, okay, I then start looking for a potential long position, risking the J lines over here. I also have a bull flag. I have another bull flag. So each of these bull flag is a potential add to my position. Now I show you how they trap over here retailers because, oh, sorry. Because if we see over here, this bar, they made it on purpose to create a fake breakdown. Okay, this is another shooting star is not really like this. It's a doji. Okay, so we have a wick to the downside. This is what? This is to invite traders to start shorting because we have a breakdown of support and they do it on purpose. And this is also a way to stop out the long traders, the bull traders. Okay, so it's a clear the book. Okay, it's a liquidity trap. And then we start having over here our trendline break. So you can start adding. This is another setup that we had this morning, I think, in 5-6 stocks. You can add to the position, add to the position, add to the position. If you look PLTR this morning like this, is exactly the same. And then you can write these trades. So small caps that do the same thing that Tony did, we had today SST, so go check ASST. We had, for example, EDBL for 2 days in a row. We had SYTA. SYTA, I think, went up like 400% or maybe more. So the opportunity to have them. How to spot these? Well, there are some criteria, but I would say that liquidity already and gap percentage is one of the most important things. Amazon, okay? Amazon is a good stock to trade. I like to trade options when you trade Amazon. Stay when you trade options with a very small spread. I like to trade according to underlying stock. I always trade like that. I was trading cover warrants when I was 19 years old, 1999. And yes, 1999, guys. I'm 43 right now. So if you trade options and you day trade options or you scalp options, all right, and you have spread, the spread will kill you. If you trade options instead with a very low spread, let's say 10 cents, 15 the most, then you can simply, and it has to be very liquid, okay? Then it can simply be a money maker. Sometimes the options could be on Tesla on a big day, could go 300 or 400%, maybe on the Lotto day, which is generally Friday. I generally trade weekly, so the expiration the same week or the week after. But remember, these are very, very, yes, they can make you earn a lot in a very short time, but also they're very risky. Okay, so that you know why to trade option, because Amazon, it costs you for 1,000 share $187,000. You want to make the same percentage. Maybe you take like $5,000 of Amazon in options. Okay, just making the comparison. And over here we have now a trade. Okay, so you can see the market is already all blue. This is the open bar, and you can see that we have F buyers, F sellers. Over here, we have the majority of these are sellers. And then over here, we start having our bull flag. What happened? Our bar over here of entry is the majority of the bar. You can see 80 or 90% of this bar is blue. What does it mean, blue? It means that we have like actually buyers. So you enter the trade here or the next bar. You place your stop loss over here, relative low. And then you can simply look to trail. This is a setup that is a stock, is an example that didn't really did great. Came over here a couple of bucks. We had another dip over here, the system alerting you to long more, came up. There was some bottom divergence, then it fails, so you get out. So it's a small win. But I wanted to share with you also, because we have something that I believe the majority of you knows or should know, that there's the volume divergence. Volume divergence is a way to often spot reversal plays, okay? So you will see higher highs on the stock, creating another divergence with the volume. So you will see, for example, lower highs, okay, or lower lows, but actually lower highs on the volume over here. So there's divergence. This is going up and this is going down. What does it mean? It means that in the second over here top, we have less volume, okay? So it means that it is getting exhausted. This is how to spot. Case study and trade examples. All right, so this is a real trade that actually one of my traders took. So you can see a small cap, what is? This is the 7th of May. ASST that was in play today. So today, imagine ASST was at $12, okay? But you can see over here that in 35 minutes out of the gate, the stock went from 3.5 till 5.50, okay? So basically 1,000 shares, $3,500. Of course, you scale out, okay, but at least this is $1,000. Okay, so you make like almost 30% of your money in about 40 minutes of work. Now, the dip came into the J lines. The trader scaled out. Another cup pattern over here. So remember those cup patterns, the contraction of the volume. Again, burst in the volume over here, another contraction over here, the volume, burst in the volume over here, and then a push and exhaustion. So pre-market session, determine first of all the key setup, the key support resistance. Look for confluence, J-lines, key levels, candlestick, and DOM order flow. Always define a risk in advance, strong pre-market, enter on cup with volume, result 1 to 6R. Okay, so you risk 1, in this case it pays 6, and not always that you will get paid 6, but in a case you got paid 6. Let's see another example on futures. Okay, this is another student, another trader. He's actually trading pretty good. He's from Dubai. I met him. He became, I would say, expert in trading, yes, and NQ with 2 setups only. Okay, everything that he does is trading 2 setups. This is the early pre-market session, so before 9:30. Over here, what I want to share with you is that the price goes into these 2 levels over here of the gray. These gray are the J-lines, okay? So in this case, you're looking at the J-lines exactly as we said before. We have a bear flag, that's your entry. You scale out the partial, you re-add more, you scale out the partial, you scale out the partial, and that's over here how you take your 100 points per contract. Let's look another stock. This stock, guys, this is something that I trade. I made a video on this. I share everything that day, okay, on the stock. This stock, KTTA, for who knows it, is one of the hardest stock to trade for the manipulation that you can have. So there was a lot of study by my side on this, and there was a lot of I would say, learning from this trade. Over here, I lost 4 figures on this trade. This was around 9:35. I made also a video recorded. I will share my broker, my screen, and everything. I lost 4 figure, a big 4 figure, because I sized over here, and I shorted into the J lines. And I will tell Jay, you said that you don't short into the J lines, you will go long. Exactly. You do errors because I'm not an algorithm. So what happened over here? I longed it after. Sorry, I shorted. I stopped. I re-shorted over here, and then the market was still not fading, and the volume was pushing big. And then I started saying, but this is the cup pattern that I always saying to take with the J lines. Okay, the same example we saw before. So when you use like I have this stream deck, I have razor, I have 2 stream deck and 1 razor. Okay, so I put hotkey for reverse the position. So over here with the short, it didn't fail. You see this wick to downside didn't fail. I got long. I loaded. Started skilling out, skilling out, skilling out, skilling out a little bit more. Over here, you can see this little inside bar. I missed the entry, so I wanted to add. I scale out more. I re-added, add a little bit more, scale out, re-added on the dip, scale out. Bought more, out everything. Lost 4 figures, close the 5 figures. So by saying one thing, often you will start your day bad. Be very smart and be with patience because you have to be really with nerves of steel when you're trading stocks, especially intraday. Day trading has a different type of anxiety, and I did a lot of research even with doctors about anxiety. I suffered by panic attacks, and I had, I think, every symptom possible in trading. This is trading since 1999. So I did a lot of research with neurologists and everything, how you can get better, how you can do mindful exercises, how you can do like meditation and everything of this. I spent years and a lot of money doing this. And I can tell you one thing, that you have to try to leave the emotions, and there are some techniques out of the game. It's not always possible. We're not always the same. Everybody has his problems. But when you trade, you have to try to get into another station. Okay. It's just like I would say, Joe Dispenza says the quantum real and all this, right? Actually, you have to elevate yourself with vibration in order that you don't feel all this when you trade. So you're not looking, oh, I'm making 4 figures, I'm losing 5 figures. No, your point has to be just like a computer, like a robot, like a bot. The more you can be like that when you trade, the more you, first of all, can become, decide better, and also last. Because it's very easy to trade a couple of years and get retired. It's very hard to trade for a lifetime, like Fausto, for example, and still be successful and really on the pedal of the gas. Personally, I'm getting older. I release the pedal on the gas and I mentor more traders right now because that's really what satisfies me. I did my trading, so I'm just like trading smaller. Few things and about this. Common mistakes, we just explained, but I want to focus 1 second on psychological errors. FOMO, okay? It's very common to use FOMO like, hey, what day is this? Everybody's FOMO. Well, there are techniques to manage your FOMO, okay? For example, one of the most easy techniques that you can do is actually take a feeler. Let's say you trade Tesla. Let's say you trade NQ, okay? Maybe you trade M and NQ and you start with 1 or 2 micro contracts. Maybe you trade Tesla, you start trading with 10 shares, 5 shares, okay? And maybe your usual is 500 shares, 1,000 shares. Trade really like 5, 10, 50 shares, like 1/10 of it. You trade in small caps, maybe you trade 10,000 shares. Okay, start with 100, 200 shares because often you will be early in the trade. Especially look just before, like, the average that I did that I lost 4 figures because I enter right away and I press right away the size. Okay, and even if I lost only 30 cents on the chart, that was a big loss in terms of P&L for me. So that is the first thing. Have a hotkey. Really, I call the super hotkey, which one is for futures on Ninja, one is for stocks, where I have like 10 shares, another one is like 2 micro contracts, just to tell you the way to do it. Revenge trading is very important to work with a team. So when you work with a team, when you share ideas with a trader, with a mentor, you can simply bypass all of this and cure it. Okay. If I'm sick and I go to the doctor, in Italy we do like this, hopefully not, but it's not like going to cure all the body. The doctor will do an anamnesis and look where I'm sick, and he will try to simply fix the thing where I'm sick. Okay. So that is an important thing. So you have to have a report card. You have to work with a mentor because in that case, you will see where you are lacking, what you have to improve, and a mentor can see you from outside. I tell you this, uh, many of the coaches that we had, let's say the coach of LeBron James or the coach of Michael Jordan. I mean, they became successful because their athletes, Jordan, LeBron James, or in other sports, or like even Sinner, the number one in tennis. I like tennis. Sinner is Italian and blah, blah, blah. So Fausto will be happy probably. So they are amazing athletes, the best in the world. But they're coaches who are like, never like super athletes, but they were able to bring these traders to the top level. Why a mentor is important? Because it helps you to see things from outside and it stays with you, showing you the path to do and working with you every single day. Okay. It's just like you can never be a good football player, a good soccer player, a good tennis player if you don't have a great coach. Okay. In the sense that he inspires you and he pushes you to do better. Over leveraging. It's an error that I did and I still do. What it means that sometimes I oversize, and I know that a lot of you can oversize. So oversizing when you have uh, a stock that is working in your favor, a future is working in favor is great. But oversizing when things are going bad, that means adding to a losing position. So never do it. That's the reason why setting a max dollar risk with a broker for the day is something that saves you in the long run. So I think over here I finished. I just want to say that we're giving for today for the Fausto Pugliese and Cyber Trading University seminar, Unlock 50. That's the code, J20 Code registered chatroom yearly membership. so that you can try 2 weeks in the room for $50, see that what we're trading and what we're saying is not fluff, so you see behind the scenes. Or you can come to trade with me. Last year I had 140 traders over here, group of 5, 6, 10 people. I'm building an academy where I invite also Fausto, and it'll be ready in 1.5 years, for 200 traders. Okay, an academy of trading for 200 traders. We'll have like 25 trading stations. It's going to be the best thing you will see in Italy and maybe in Europe. And that is $50 for 2 weeks. And then you get the room for 50% off for the first year. Fausto, you're still over here, buddy? Or you went to eat?
No, I went to eat. I got back. I'm good. I'm not like you. I wish I was eating in your neck of the woods, though. There's some nice Italian sopressata, a nice little prosciutto.
Yeah, I wish. I'm doing the carnivore right now. So there's the prosciutto, actually there is, but there's not too many carbs out there. Just like meat and, some proteins.
That's awesome. But no, listen, thanks for being here. I know a lot of people learn a lot. I mean, listen, I know you trade very similar to the way I trade a lot as a day trader and you same platform, but looks great. Appreciate it. Thanks for being here.
Thank you very much.
And make sure you hit me up when you're back in town.
Absolutely. Thank you very much, Fausto. Thank you, everybody.
No problem. Thanks for being here. All right. So let me share my screen. Let me share my screen, everyone, and let me pick up where we left off. Hold on. All right, perfect. All right, so well, thanks for sticking around, everybody. And remember, we got 3 more speakers that are going to be coming up, and it's going to be a very exciting one. A lot of options talking about, a lot of day trading. You could see the great knowledge of all these traders, and you learned a little bit from everyone, and that's why we're here. But I want to pick up in where we left off from yesterday. And I know some of you here were here yesterday. Some of you weren't. Who was anyone here yesterday? Just give me a chat back. Anyone here? Anna, who was here? I didn't see. Teresa, you were here. Okay. Just give me a yes or no. I want to see who came here first and twice. Not. Okay. Tom, you weren't. A lot of you yeses. Neil. All right. Good. Jennifer, you were. All right. Perfect. David, no. All right. Well, basically, what I'm going to talk a little bit about today is pretty much, entries and exits. You saw a lot of, analytics, you see tools, you're seeing platforms. Most importantly, what you really should get a lot out of here is not just the style, but we all trade very similar when it comes to discipline. And, let's think about it. The biggest problem a lot of people have is they just don't know when to take profits, or they don't know when to take a loss, and move on. So there's good things and there's bad things, what we do as traders. Sometimes we sell things too soon, but we know how to get out, and don't hold too long. So if you could figure that out, and be more disciplined and more psychological, you could do this job for the rest of your life. And you can see we all have a passion. We love doing it and everything else. So let me tell you a little bit about what we're going to be doing here at Cyber Trading University. And, we'll talk about the trading room and invite you all back after that. Just remember, everybody, just really quick, no guarantees, no promises. This works for everyone. No such thing as crystal bowls and unicorns. All right. All right. Just remember, it is very high risk in trading. So please don't go out there and trade what you can't afford. All right. So anyway, I have to thank all the guests for being here. We still got 2 more guests to come up right after me. So, and like I told you, this is going to be recorded. You're going to be able to go back and review all of it. Now let's talk about what I'm going to be doing here for the next 45 minutes. I'm going to talk about how to follow the big money. Okay. And, a lot of us keep talking about it, but did you really ever see it ever come to fruition? And you ever see the price action of these stocks? We talk about Serge, we're talking about volatility a lot. We're going to see the volatility of the stocks. Volatility is not really the problem. They're all over the place. It's to find one that's going to give you the least amount of risk with the most amount of reward. A lot of you are finding these stocks. You're watching our watch list. You're seeing how these people come up with them. I'm going to show you how to do it. It's not that hard. The hardest part is about just buying one stinking share of it. Just get into the trade. Let me tell you something. What's the worst thing could happen? Oh, yeah, Fausto, you could lose money. Okay. If you're worried about losing money, you're in the wrong business. That's like saying, what's the worst thing that could happen to you driving a car? You can get into an accident, right? And like, so what are you going to do? Not drive? You just got to be careful. That's all. Same thing when it comes to trading. So a lot of risk management we'll talk about, a lot of price action, all that good stuff. Now, for everyone here, you're all going to be invited to my trading room. Let me just bring it up right now and just share you what we got going on. I'm going to see what they're doing in the room actually right now. Where are they? There they are. All right, so they're looking at the stock Rigetti. And you could see all the traders in here. Over almost 200 traders in. It's usually kind of quiet. A lot of them are in here right now. And, you know, middle of the day is not always the great stage to trade, but you can see people from all over the world. Ontario, Canada, Utah, North Carolina, Virginia, all over the world. And right now they're looking at a stock called Rigetti. Okay. And what we're using right now, we're showcasing the TradeStation platform, one of the several that we use. On the right, you'll see over here. Let me get my crayons so you guys can follow along. There we go. So right here, you can see this is called the matrix. So we're seeing all the volume. I like to have it on the right because I call it the right of the chart. So we're seeing all the big block orders. We're seeing the direction of the stock moving up pretty nicely, you know, seeing the trend of the stock, all that good stuff. All right. Now, does anybody know why the stock Rigetti is going up? Does anybody know? Why is the stock going up? It's a simple question. There you go. Teresa, you hit the nail right in the head. Gillis, Joseph, all of you guys. There's more buyers. There's more buyers than sellers. So it's not the Fibonacci. It's not the MACD. It's not the VWAP. It's buyers, right? So the way we become a good trader is we got to know where the buyers are and we got to know where the sellers are. That's what basically we're gonna be looking at. So all of you are going to basically come into that trading room. When you're done after today, you're all invited to come and see it. And I'll give you the link. But let's go to the real market and see what's going on. So they're looking at the stock Rigetti. RGTI. Okay. So looking at Rigetti, great move. Okay. You can see here's a 3-day chart up on top. But look at that move this morning. $11 to $13.50. Okay. Now, is it too late to buy the stock? That's okay. Isham. Is it too late? First of all, it's never too late to buy a stock. Okay. Never too late. It's basically, it's only 1 o'clock. I mean, it's still early. So what do we need to do? We need to go find out where the orders are. Okay, so we're going to look up RGTI. And we're going to look up Rigetti. And we're going to see where the orders are. And we're going to see what's going on with this stock. Why is it moving so much? So let me just go back about 3 hours and past. All right, just getting some more data, historical data. Let's let that load up. Almost there. All right, good. So what we're seeing right here, this is 9:30. Okay, this is when the market opened up right here. This is pre-market trading. Okay, this line is when 9:30 kicked in. Now, you could see that there were orders early, but you just notice how that line got very dark. That line is this big seller right here. Okay, so what you're looking at is a heat map. This is basically all the orders out there as in a heat map. Now, you could see that the big orders are here, 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 and here. This order right here was $12. Okay. What happened here at $12? Can anybody answer that question? What happened right there at 12? That's right. The order got filled. Okay. Now, how do stocks go up and go down? Buyers and sellers. So there was obviously a big seller there at 12, with a big seller makes resistance levels. So by having a resistance levels, what happened to the price of the stock? Should go down. But in this case, this is called a breakout. Some of you don't know what a breakout is. This is what's an official breakout. There was a seller out there. Someone saw it and said, sold, I'll buy it. Okay. So if you're sitting there and you see all these sellers and like, oh my God, if someone's looking at, you don't want to buy with a lot of sellers out there, but listen, you're just the ants on the floor, right? All of a sudden, this guy comes in there, buys it, boom. How do we know he bought it? Because this volume bar is green and that bowl is green. Now, the way we look at orders is something called time and sales, okay? And when you look at a time and sales window, there'll be green and red. Green means transactions on the ask. Red means transactions on the bid. So by having a lot of greens, it means a lot of buying. So then what happened? Came to the next seller. Let me clear this out for you. We came to here. That order was 1250. What happened at 1250, everybody? Anybody answer that question? What happened at 1250? You got filled, right? Can everybody write that in there? Filled. You ever get that on your phone? You do an order, got filled, whenever you do an execution. So that's right. Another breakout. Okay. So when you break through a resistance, where you go to? The next resistance. The next seller was here. What price was that? 13. What happened there? Everybody, come on, there's over 100 people in here. Don't be bad. Repeat everyone else is repeating. He got filled, right? Filled. There you go. Doc, I see you in there, Doug. Come on, John, Judy, Mark, Peter, Teresa, just write filled so I can see you following along. Because being a good trader, and being part of a team, you have to learn how to contribute. If you don't talk, we're not going to know if you know what you're doing. All right. So when an order gets filled, what's going to happen from there? What happens next? Is it done? Is it over? Fat lady sang? Game. What is going to happen? There you go. Teresa hit the nail on the head. You're going to go to the next resistance. Where's the next resistance? Right here. Now, let me zoom in a little bit closer so you guys could read this a little bit closer. That big seller right there got filled. See the big green ball, right? So that was 1350. Now, where's the next biggest resistance? You know what? David, did you need an indicator to tell you that? Joseph, you need an indicator to tell it? Teresa, you need an indicator to tell you that? You all hit the nail right in the head. You said 14, right? Got 270,000 shares out there. We saw what happened. We broke this resistance. We see what happens. We broke this resistance. We saw in the past. It's not what's in between. It's going to, that's the next resistance. So having a game plan is knowing where the next resistance level is. Now let's do the math. I love doing this. Hold on. So 50 cents times 1,000 shares is $500. Is that a lot of money? I don't know. Let's times that by 5 days a week, and let's times that by 52 weeks. Does anybody here want a job that makes 130,000? Anybody here want that job? Of course you do. Right? Of course you do. We're not trying to kill it. Did you ever thought 50 cents was a lot of money? Right? You see how important it is to prepare and have a game plan where it's just not like set it and forget it, because this is why people love day trading. And this is what we're about to learn. Now, let me minimize this. Let's go and let me tell you a little bit about myself so you understand, where did you learn it, Fausto? I mean, why am I listening to Fausto Pugliese? Why am I here at Cyber Trading University? What makes you different than everyone else? Well, I've been doing this. I'm 53 years old. I've been doing this for over 35 years. Okay. I was trained by some of the best traders in the world. I live here in New York. It's the financial capital of the world. Okay. And this is what we do all day. This is the trading. When you think of New York, okay, it's not about good restaurants and Broadway shows. Okay. This is the heart of Wall Street. Okay. Your Main Street, we're Wall Street. Where does it all start? Here. Now, you look at that picture, that article was written up about us, a bunch of kids tormenting Wall Street. What I love about this photo, and I keep repeating, telling everybody, look at that monitor. Okay. Does everybody look very, very closely? Do you see any indicators? All right. Do you see a news, some writing? You see numbers. So the technology I'm about to show you right now, that's going to be very disturbing, has been around for over 50 years. It really hasn't changed. The only difference is you don't got to get a job on Wall Street anymore. You can do right from the luxury of your home. That's the power of it. So just to let you know, you could look at me as being your great-grandfather, okay? Because when I started, it was about a couple of thousand of us. Now there's several million around the world. So I'm one of the original day traders that started it. So I've competed against some of the biggest traders in the industry. I beat every single one of them. I've surrounded myself with some of the greatest traders. One of the highlights of my life was ringing the closing bell in New York Stock Exchange. Everybody know who this guy is right here? Steve Forbes. Funny story about him. That was the first time he rang the closing bell. So I was actually honored. I would think this guy goes and rings the closing bell all the time, but that was his first time too. So it was a great experience. Anyway, I've been also featured on some of the biggest and most well-named news services. I do a lot of contracting work for NASDAQ. I'm doing one right now where I'm teaching their Asian markets how to trade on NASDAQ Total View, which I'm going to show you next. But if you go on our Instagram, TikTok, you'll see tons and tons of videos of every place I've been at. Now, I love teaching people over the course of 30 years. My goal today is I'm looking for traders that I can make part of my team. Okay, so if you like what you hear, maybe you're going to be one of these people one day. Now, my parents always taught me, I'm first generation Italian. They said, listen, you want to be a good trader, surround yourself with good traders. If you want to learn how to be a better trader, learn from bad traders things not to do. Okay, because remember, when you take a job as any job, they hired you because they assume you know what you're doing. But when they talk to you, they're all trying to educate you and teach you things that you shouldn't be doing. All right. And that's the power of trading. Now let's talk about some of the stocks that are moving. Listen, NVIDIA, NV, all these stocks. I mean, there's always things that are moving in the market. NVTS was up 180% last night after the close. But the thing is, finding them, I'm going to show you. But let me tell you my top 4 tools that you need. Okay. Because this is realistically all you need when it comes to a platform. Listen, these platforms, they give you everything, and I don't know if they're just a bunch of show-offs, but I know they're trying to appease everybody, options, futures, Forex, and every type of trader needs a certain tool that's going to help them. So let me explain to you what we have here. We have a intraday chart. We have a percentage gainers and losers. We have a level 3 and a level 4. Now, just to ask everybody another question here. Out of those, how many do you have? 4, 3, 2, 0. Teresa says 3. Gillis says 3. Tom says all. Amish says 2. Neil has 2. All right. That's it. Alan has all of them. All right. So you could see that some of you here are missing a lot of this. So let's talk a little bit about them. Let's start about, first of all, how we find the stocks, because everybody's always asking me, you follow me on, X or Telegram or my alerts, how are you finding them? So finding them is actually pretty easy. We just work through our big percentage gainers and losers. Okay. Now, remember, we're looking for stocks that have volatility. What does that mean? It's stocks that have movement, stocks that have good percentage gainers and movers, not in points, but in movers. So let me show you really quick what's moving this morning. RGTI. Where did we see it last, by the way? Didn't we see it here at 1350? Didn't I say it's not too late to buy it? All right. Not bad for a day's pay. But let's go work off our big percentage gainers. Now, some of you here will look at this and be like, okay, well, how do I know which one to trade, when not to trade, Fausto? Well, let's look at VIGL. Okay. Look at the intraday chart on VIGL. The stock went from $2 to $8. Would you buy this stock right now? Yes or no? It's up 241%. Dave says no. Gillis, you hit the nail on the head. It's a buyout. So how do we weed them out? Scratch. Next one. NVTS. What do you think? Stock went from $2. Oops. Sorry about that. Stock in the after hours went from $2, went all the way up to $7. It opened up this morning right around the $5. Okay. It's up 150%. Great run up. Would you buy the stock here right now? Yes or no? Joseph says maybe. Gillis says yes. Amish says no. Dave says no. The correct answer, everybody ready? No. And why is that? Because it's not going anywhere. It's flatline. Let's go to the next one. IONX. Would you trade this stock? Yes or no? All right. So if you said yes, you're wrong. And I'll tell you why. First of all, it's an $80 stock. Expensive. Number two, if I could freeze it, look at the spread. Look at for you to buy it, you got to pay this. For you to sell it, you got to sell it there. It has about a 20 to 30 cent spread. That means if you buy 1,000 shares of it, if you're wrong, you're going to already be down about $200-300. All of you just said I would just be happy to make 500. You want to automatically be down 500? That means you got to make 1,000. All right. So does that make sense? There you go. All right. So how we doing? Not doing good. So out of the top 20, we're really kind of working our way down this list. BON. What do you think of this one? Tradable or not? That's what we call it. So I don't want to spend too much time on it. Yes, it's got another flat line. So you could see that this is how we kind of eliminate the stocks. Now, let me just try to find something that is tradable. All right. Has this one, ASST. Would you trade this one? I don't know what that means, high of the day, but so if you answered no, you are wrong. The answer is yes. At 9:30 this morning, stock went from $9 and shot up all the way to 13. Okay. That is what we look for, fellow traders. And let me just bring this up for you here. This right here, I want you to look right here. Does anybody see that right there? That is our watch list. Okay. 9:20 in the morning. So we start the meeting at 9:20. You see what's on that list? ASST. What price was that stock at 9 o'clock this morning? Right here. Look where it was. 11.50. Look where it is now. 13. If you bought 1,000 shares and at 9:30 this morning, and if you sold it now, how much money would you make? Would have made? How much money would have made? Over $3,000. You know what that is over the course of the year? It's almost $1 million. Anybody here want that job? Okay. So do you see why a lot of people fail in trading? Okay. If I go, let me just do this really quick. Okay. Hold on a second. Anybody use ChatGPT? I'm going to ask ChatGPT, what is the failed rate in traders that trade the stock market? Let's check this out. Let's ask. The fail rate is very high, estimated consistently shows that 80 to 90% of retail traders lose money. Only about 10% consistently profitable. Why most fail? Lack of discipline, poor risk management, unrealistic expectations, no proper education. Oh, there we go. Emotional decision making. There we go. All right. So does that answer your question? So think about it. How many of you got this answer wrong? You thought for a second it was, but the other ones you thought were right. This is what we teach at Cyber Trading University, and this is basically what I want to do right now. Okay, so finding them, you saw how we scanned it, we killed it out. Right now, are these recorded? Yes, they are, Anna. Yes, they are. Absolutely. Now, by the way, is anyone here subscribed to my YouTube channel? Anybody here have it? Can we post up that link really quick so everybody could download it? I don't know if Rich is there. Someone in my staff could put it in there really quick. Not yet, Beth? Okay. Michael, you are? All right. There we go. There's the link. Everybody just click on that link really quick and just go to the channel and click right here where it says subscribe, which is amazing. Look at that. Look how many videos we posted. 3,900 videos. All right. And when you go here, what I've been posting a lot more is these shorts. And the shorts have been great. If you want to know what happened to Tesla, you want to learn what happened, with IPOs, iceberg orders. This actually was a really good one. Did anyone see this video I did on United Healthcare? This is the last one I just posted. Okay. Instagram. This is a really good one. If you get a chance, watch this video right here. That has been beaten down due to short-term issues. So basically what I do when I talk about in this video is how to follow stocks that rebound. And I want to bring up this stock really quick. Let me show you this right here. Where are you? Oh, there you are. Okay. So United Healthcare, look what happened to this stock. It was $600, dropped all the way to 480, dropped all the way to 380, went all the way down to 250. Now, on this day right there is when I made the video, okay, and I explained to you why it was a buy. And from that price, which was like 275, it ran all the way to 320. So the purpose of these videos is not to show you, like, I can't tell you what to buy and sell, okay? First of all, it's illegal. You can't do that. Number two, the goal I was trying to show you here is, who cares about United Healthcare? I'm only looking to make money, right? Is that why you're here? Think about it. So if you bought 100 shares, not even 1,000, and you paid 280 and you sold it at 300, do you know how many points that is? That's 20 points on 100 shares. It's $2,000. And you forget about 230. Forget about buying at 250. If you just bought in between, you did pretty good, So when you get a chance, watch that video, fellow traders, because this is why you want to subscribe to the channel. And this is why you want to come and join the trading room, because you still want to sit there and just watch these videos. You also want to be part of the team and see it actually get in and get out of it. All right, let me X out of that. No, I would not. No, I would not. Right now, no. Party's over. Not probably for a couple of days. I'm hawking a couple other stocks right now. One of them right now is that got pretty beat up. I'm a really big fan of. Now that you're asking me, would be Archer. And where is she? Yeah. Archer's the one I'm actually watching right now. Got pretty beat up. This one's actually pretty good. I own Tesla. I own a lot of the what's it called nuclear stocks. RCAT's moving up pretty good. I own NVIDIA also, and I own a little bit of iBit. I sold a little too cheap. All right. So anyway, let's go back to the. There you go. All right. So let's go and move on. Let's talk about this. So timing during the day is always important. The most first hour and the last hour is important. You could see here with WRD stock at 9:30, which I just showed you, like ASST stock goes from $8.80 to $11. Great run up. But the thing is, what is the game plan? Okay. The game plan is following the money. And let's always keep that in mind. I mean, I think they even made a movie about it with Eddie Murphy. Okay. But one thing I like to do is, and what I kind of teach everyone, and I do a lot of presentations for NASDAQ about it, is I want to show everyone how you could start following the money after today. Okay. I'm not selling you any program. You could do this yourself. And I'll even give you a couple of videos where to get it. But you could actually have a seat on the exchange. You could actually see every single stock that's trading. You don't have to be registered and licensed like in the old days on New York Stock Exchange. You can now get this data on your own directly from the exchange. Now, some brokerage firms offer it, but I always kind of recommend to everyone, just buy from NASDAQ first, and then you could see, make sure you got the layout set up. But let me show you exactly what we're looking at. So basically right here are all the buyers that are trading HIMS. And these are all the sellers. And whoever wants to buy for the most is up on top. Whoever wants to buy for less money is down at the bottom. So this is basically a big chat room. You're seeing where all the orders are. Then think about that. Think of the technology you have. Of now you're going to realize that you've been trading blind this whole time. And let me just prove it to you. Look at this chart right here. We're looking at Revyon. And you could see Revyon went from 614, dropped all the way down to 1480. And for some reason, it decided to go up, back up to 1620. Now, that some reason is not, an excuse. There was a reason. The reason was there was a buyer of 144,000 shares at 1472. Now, when you work your way down this list, you notice there are buyers at every price level, 200, 500, 700, 144,000. You know what that's called? That's called a demand. That's called buyers. Signed up for last night. It's working out. Launched issues. Thank you for sharing the tools. No problem, Beth. And Beth, to make sure that you watched did you watch the videos I gave you, Beth? Those 2 videos, how to set it up, set the defaults and everything. Okay. And hopefully you're in the trading room so you could see us basically what we're showing you, Beth. All right. Good. All right. Perfect. Now, let me clear this out and let me go to the next one. So look at the sellers on this stock. Okay. You see how the stock went up 18 to 80, 60, went back to 19, back down to 1860, back up to 19, and boom, goes down to 17. Why did it have such a tough time getting this number? Because first of all, who thinking 19? It should be 20, right? Where did 19 come from? I'll tell you where 19 came from. The seller on the sell side for 139,000 shares. Okay. Now, I don't really care about 2 digits, 3 digits, 4-digit numbers, but 6-digit numbers, like 140,000, yeah, I would think that's a lot of shares. Because you got to remember that people all over the world trying to sell the stock. These are all the limit orders around the entire world. You're seeing every order out there. Why in the right mind would nobody want to see that? I still can't figure it out. I still can't figure it out. So to me, when I come here and I show you stuff like this, I am completely convinced that every single one of you, when we're all done, you're going to sign up. Because and once again, you're not signing up with me. You're buying a ticket to sit on the floor of the exchange. I mean, is anybody in a position right now? Anybody own a stock? Anybody own anything? What do you own? Mike, what do you own? Gillis, what do you own? Tesla, Teresa, you got it? Okay. Wouldn't it be nice to know, if you did know this on Tesla, that there's a 300,000 share seller it's testing right now, having a game plan? And would you like to know if he's actually getting executed, or he's doing something called, which I'm not going to cover here because it's too much, refreshing? Meaning, is he updating his order? Is he lying he only has 200, or is he really got 2 million? You know what I'm saying? Anna, I'm gonna tell you in the next few moments. All right, you're gonna get that in the next video. Anna's asking me, where can I find those 2 videos you sent Beth? So when you register, when I'm done with my presentation, you're gonna get those videos. Okay. All right. But if you want to just take a really quick, you could also email me. If you did not get it, email me at fausto@ctucorp.com. So if you want to open up your inbox right now, while it's fresh in your head, just open up an email, type in Fausto, and there I am, and just say send NASDAQ book. That's it. Oh, and also make sure you give me your name, because some of you here, you listed at some name I don't even know, and just hit send. All right, I'll get over to you. All right, fair enough. All right, so let's move on. Oh, there's my bell ringing. I mean, someone's you guys are already filling that form. Perfect. All right, so we see icebergs, what we call these big block orders. We call them iceberg orders. We see them every day. Every day. I mean, you just heard Joseph from J Trader. I mean, actually, I'm sorry. Serge was using his tools talking about Palantir. And, it's nice. You could use, all those tools, but here's Palantir, right? And you see the stock is going down. So even when you're using their tools, they're like, okay, that tool looks great. It told me this stock to buy, but where's the buyers? So when a stock goes down, nothing's going down to zero, okay, which that could happen. But let's be honest, people are short, people are covering. So if I really, really like Palantir and it's going down and I'm like, you know what? Maybe this is a buying opportunity. I want to see who else is thinking of it being a buying opportunity. And when I work my way down on the buy side, you could see clear as day, 180,000 shares at 115. Okay. So what do you think is going to happen at 115? 2 things could happen. Number 1, someone could sell it to those 63 people, or number 2, no one's going to sell it to them, and it's going to bounce there. So without looking at any chart or any indicator, what do you think ended up happening? It got there, it tested for a couple of minutes. He wasn't letting loose, and there you go, 115 to 118 in less than an hour. Not bad for a day's pay. Okay. Peter, don't worry about giving your email box. We're going to send it to you anyway. All right. So don't worry about that. If you're registered, Peter, you're going to get the videos for these. Okay. But better, you're going to be able to register and come watch me trade. All right. Now, some people always ask me and they say, Fausto, I'm not a swing trader. I'm more of an investor, or I got no time to day trade. Listen, you don't have to be a day trader. You could apply this towards swing trades. Absolutely. Absolutely. Look at this example right here on this stock, Palantir. Look what happened when it hit that 15. It shot up to 130. The next day, the buyer never gave up. So you're like, my God, that thing went up huge. Well, did you see the big buyer that's out there? Because definitely has a lot to do with it. Let's go check out NVIDIA. NVIDIA was a pretty cool one. Okay. So NVIDIA, after the CPI numbers came out, it went from 132, it dropped down to 131. And then some people are like, oh, I mean, I have a profit. Should I take it? Should I sell it? Well, listen, there's always going to be someone looking to buy it, because when you look at the NASDAQ total view, you'll notice that 98% of what's out there is useless. I mean, there's always going to be buyers somewhere. I mean, everyone basically, a lot of people own it around the world, but it's that big one that you focus on. It's the 742 orders out there that make up the 124,000 shares. That's what matters at 131. So what do you think happens? Exactly what you would assume happened. Unless somebody sells it to him, which they didn't, it went from 131 to 135. Another nice little pop right there. Let's check out some resistance levels. TEM moving up beautifully, beautifully. Issue is it going to continue? Because we got to take a profit eventually, but sometimes we feel guilty. We don't want to sell too cheap, right? We don't want to screw all that up. That's okay. Where's everybody else feeling that they want to get out? Because I'm just an ant trying to get the crumbs. Okay, $64.42, 160,000 shares a guy got to deal with. I don't want to deal with that person. I don't want to deal with him. Let somebody else break through that wall. So where do we get out? Well, from what the chart says, 67.43. Because that's where the big block order is, because we don't want to give away a profit. And guess what? If you didn't get out, now you convert a winner to a loser. And don't tell me you have never done that before. And once again, always remember, Fausto told me this here at the Cyber Expo. Why did I lose money on that stock? Well, maybe someone was trying to sell it. I didn't know he was out there. I had no technology out there, but now I do. Maybe I should get NASDAQ Book Viewer, Total View. Done it every day. Listen, well, guess what? It's time for a change. Don't worry about it, because that's why you're here. We're here to fix that problem. Reg says, I changed a winner to a loser almost no time at all. Well, can't say better than that. Let's check out SMR. This is one of the nuclear stocks that we've been trading. It's been doing pretty well. Big run up on that stock, 23.20 to 24.80. Now, basically, stocks are like a morning breakout. Where's resistance? Always got to know where the sellers are going to take a profit. So we got the big sellers hovering here around $25 at $90. So I'm about almost 50 cents away from dealing with a big block order. Now, it didn't sound as big as the other orders, but realistically, when you look at all the other orders, they're all hundreds. That's a 5-digit number. That's almost like 900 times more than the average. Guess what? Didn't get out right away early this morning because I was too busy filling up my coffee, and I didn't want to take that guy seriously. Well, that coffee just cost you about a few $1,000. All right. I mean, I don't want to keep beating us over the head, but is it sinking in now? All right. I think you really want to know what an iceberg order is. By the way, I came up with that word. If everyone had watched the movie The Titanic, everybody know the story about the Titanic? Didn't work out too well for the Titanic. You know, so here you have a stock, it hits a major resistance levels, boom, the thing tanks. You know, you don't want to be the Titanic, because unfortunately, no one made it on that ship. Now let's go back to the real markets. And let's talk about a couple of things right here. Let's go check out, what was the stock we were looking at before? Oh yeah, that's right, Rigetti, right? Let's go check out Rigetti, see how it's doing for us. How's Rigetti doing, everyone? How's that looking? What's the stock doing? Looking nice, right, Gillis? Look at that. So we saw it here at 1350. Right now, we're at 1380. All right, let's go check on level 4. And there we are. Look at that. We're almost at 14. We're almost at that $14 price. Beautiful, beautiful run up. All right. Is there any stock anybody wants to look at? Give me a stock and we'll look at something. Any stock. Chewy, Google. Chewy might be a good one. Let me see. Hold on. CHWY. Yeah, Chewy's been doing really nice. I traded Chewy. Not lately, but it's moving up pretty nicely, actually. Very impressed. Okay, let's bring up Chewy over here. Let's see where the orders are. And all right, there you go. All right, so Chewy doesn't trade that much volume. You could see it traded 2.6 million shares. It started this morning right around 43. It's already at 44.50. Stock's moving up really nicely. On the long-term chart, very nice, 32 to 44. Impressive. I don't know where you own it at, but is it going to continue? Well, 45, you got about 9,000 shares out there to sell. If I zoom out a little bit further, you could see that the next biggest 9,000 share seller is at 50. And if it was to go down, you got a 12,000 share buyer here at 40.50. All right. Anything else? Archer. Let's go check out that one. So Archer, I'm actually going to buy it right now. I like Archer. I'm going to log in right now and buy it. I've been waiting for the stock to come down. It's moving up pretty nicely. Archer, hold on. Do I have it here? Yeah, I do. Buy. I'm buying it right now on my account. Just say right now. Buy 1,000. Market. Review order. Place order. There you go. Order received. Done. Okay. So I like Archer for the purpose of, you see these sellers out here that we hear early this morning around 10 o'clock? And you see these bulls? That means there's a lot of buying going on. Not that many reds, a lot of greens. I mean, so trending going up. Do I see any sellers out there? Maybe up here around 12. That's a big difference. 1040 to 12. That's a very, very big difference. Absolutely. ASST. Let's go check out that one. From Dan. Walter, we'll check out Coke. Well, I don't think Coke really does that much volume, honestly. So let me fix the date over here. Go a little bit further, 3 hours. You see, sometimes it's not up here. Sometimes it takes about a couple of seconds to load up the data. All right, so you had a buyer here. This is a pretty interesting one. You see that buyer right there? That buyer right there was probably like 50,000 shares, right around 11.50. He showed up, and then from there, it went up to about $12. But it's not really going away. You got a seller right here for 50,000 at $12. All right, Dan? All right. So, no problem. You're more than welcome. Walter says you're right. You are correct. Low volume, buy high volatility. Yes, because you need action. If there's not, the spreads get bigger. You know, there's not that much volatility in it. You know, listen, you want to make money. You know, you don't want too much volatility because then you got to really pay attention to it. So you got to be careful of that. All right. So if you have not registered to my channels, please subscribe. We posted, I don't know if you're a fan of YouTube, TikTok, Instagram, X, just click on that link, register. We got some great videos By the way, if you're going to watch any of these videos, these recordings, they will be on YouTube. So subscribe to the channel. All we ask is please, please, please like them, leave a comment, and share it. And don't forget to ring the bell, because whenever we're live, at least you can go out there and listen in. All right. Now, by the way, we cover everything. So it's just not stock trading. We do options trading. We do Bitcoin trading. A lot of these tools that we use, specifically following the orders, are on everything. Okay. I actually did a really good video. I don't know if anyone here trades Bitcoin, but we don't trade Bitcoin in general. We trade the ETF. But if you check our ETF, I did a really good video on it also. That's on there. You might like it. And I know our attention span, some of us can't sit there for 5-10 minutes maybe. But these videos are nice and fast. So to get right to the point, no fluff. All right. So let's, where are we? Okay. So if anyone here would like to register and come and join us for the trading, listen, Cyber Trading University has been endorsed by some of the biggest brokerage firms in the industry, just to name a few, some of the sponsors that we have. But also, we have a 5-star rating on Google. We basically, in 35 years, read what people had to write. We're really big when it comes to customer service. We really want to make sure everyone here is taken care of. You could talk to our staff. That's why a lot of brokerage firms like to deal with us, because we kind of like help deal with a lot of their problems you have to deal with. But, listen, we're going to be very honest with you. You know what I mean? Like, listen, I have to tell you this. Trading's not for everybody. And you know what? That's okay. And you know what? It's like telling the kid, hey, I know you've spent 12 years in elementary school, but college is not for everybody. All right. Everybody's always forcing to go to college and college and college. I have 3 sons. One of them is graduating this year. He honestly, he really didn't need it. He didn't really need it. He was too advanced for it. He went for the wrong things in school. What he's graduating for, he's really good at something else. He could have started 2 years ago and probably be really successful. But you know what? Someone's got to be honest. So when it comes to trading, I'm just kind of relating it to the same thing. When it comes to trading, we're going to look at it with you. And also, like I said, ChatGTP did rank us #1 day trading school in the industry. So if anybody here would like to come and join our trading room, this is all we're asking for. It's a $9 trial. We're not asking for a lot of money at all. Some people are like, well, why don't you just do it for free? You know what? I could do it for free, but I feel you're not going to take it seriously. We're not going to hit you with subscriptions or anything else. Just do a week in the room. Do a week in the room. Check it out. See how we find these stocks. See what the traders are talking about. And you know what? Be able to talk to us. And let me tell you, this is what you're going to get for that $9. Live commentary with me and all my instructors. You're going to get access to the trading floor. You're going to get live access to everything that we do. We're going to show you iceberg orders. We're going to show you how to get this data, all this good stuff. You're going to be able to get the alerts that we give on Twitter, everything, and access to our podcast, our VIP podcast with our professional traders, and also money back guaranteed. Listen, if you don't want to continue with us, don't worry about it. All right. And if you do register, everyone that does, I will personally talk to you on the phone. Okay. Now, when you do register, just let everybody know, make sure when we ask you that questionnaire, tell us a little bit about you. Are you making money? You're not making money? Who are you trading with? And also make sure you book your appointment. The faster you book that appointment, the faster you're going to have more fun learning in the room. All right. Now, does anyone have any questions in the meantime? Any questions? When's the best time to start? Okay, so listen, this week is Memorial Day on Monday. So usually tomorrow things get a little, you'll have a lot of fun. Do your orientation tomorrow, and you'll get the extra day. Don't worry about losing a day. You'll get the extra day. But that's when you'll be able to get the full week. Yes. I will be there tomorrow. Absolutely. I'll be talking tomorrow. This week was hard for me because I had the Cyber Expo, so I was out. It's one of very rarely that I was out. All right. Any other questions? That's something you'll be able to cover, Teresa, in your trial. Don't worry about that. How much money do I need to trade? You know what? We're going to have Wiz coming up here, and I think he's going to agree with me, from Top Gun Options. You know what? The most amount of money you need to start off with is get yourself educated. Don't worry about money right now. That's the least of your problems. Okay. Let's find out if trading's for you first. Yeah. Well, listen, you could sign up next week, but you know what? Why don't you sign up now so it's fresh in your mind? It's not going to kick in until you start. So just get your QR code, get it scanned, and then start next week when you get back. That whenever you're ready to start. Okay. All right, traders. You're more than welcome, Gillis. Appreciate it. Yes, Carmelo has a question. Does Nasdaq book viewers show orders for ECN, ETFs, and Forex? Absolutely. And commodities, but I don't do commodities. It does futures. It does, it does cryptocurrency. Look, I'll show you crypto right here. I'm going to use Bitcoin right here. Here's Bitcoin. There was a big order out here. You could see it right there. It got at 112,000. He came in twice. How many Bitcoins was that? 182 Bitcoin. See how it hit it twice? He didn't want to break it and backed off. There was a huge one at 110. He got filled. So that's how it really kind of all started. James, the deal is going on now. How long it's going to last? It's fresh in your mind. Just get it out of the way. All right. All right, traders. Listen, we're going to take a quick little break, give you some time to register, watch somebody fill up the coffee. I know that we've been, catching on really quickly every speaker, but we got 2 more speakers coming up. So don't go anywhere. I'll give you a little time to register. And in the meantime, I'm really looking forward to bringing on our next speaker, Mr. Fighter Pilot himself. I know he's really excited. Probably this weekend. It's Memorial Day. I wonder if he's flying his jet and probably contributing and being involved in a lot of these events that go on over the weekend. But we're gonna have him up next. So don't go anywhere. You're not gonna want to miss this one too. All right. Be right back, everyone. All right, traders, let's get ready to get started here. We're going to bring in our next guest. So just give me a second. Oh, well, over here. All right, traders. So welcome sticking around. I know it's been a long day. But it's been fun. I mean, learning so much. We got 2 more speakers coming up, and I want to bring my next most exciting speaker. Really excited about him. One I've been get to know over the years, truly admired, both for what he's done in the trading world and an incredible journey that he's got him here. I mean, it's just been a great story. Matt Wiz Buckley isn't just another options trader. He's the real deal. I mean, he's a former Navy fighter pilot who graduated from the real Top Gun. I don't know if anybody watched the movie, but I'm a huge fan of that. He flew about 44 combat missions, what I was told, in Iraq. And it was just amazing how he took that same fighter pilot mindset, planning, execution, discipline, and he applied it to trading. He's the founder of Top Gun Options, and before that, he ran a strategy at Peak Six, I think it was, one of those big volatile trading firms out there, one of the biggest actually. And I see firsthand how he teaches. He's sharp, he's passionate, he knows how to cut through the noise and give that excellent excitement, what you need to become a better trader. Now, Wiz has been featured everywhere. He's on CNBC all the time, Fox News, Fox Business, The Street. But today he's here with us. And that's telling you something. You're going to walk away always with a whole bunch new perspective on his trading and how he does it. So, and that's why I wanted here today to speak on the weekend of Labor Day and Memorial Day. And by the way, Wiz, we always appreciate your service. Thanks for being here. And we're looking really forward to seeing what's going on with the market and your insights on your options.
Awesome, my brother Fausto. I appreciate it. Thanks for having me, and thanks for the intro. I just want to double check that you're recording because I heard you turn it off.
There?
And
just wait.
Yeah, can you hear me? I got you loud and clear.
I see him logged in. Just waiting for him to get his audio working. Okay.
Hey, brother, can you hear me?
Real bounce potential, like U.S. healthcare. Hit us up. Follow us at Cyber Trading Expo.
Hey, man, how about me? You got me? All right, so you guys can hear me. Okay, cool.
Yeah, I hear you. I hear you. Sorry about that. Go ahead.
Okay, brother. Hey, make sure you record. I heard you turn it off, but I want to make sure you got it back on just in case. Awesome. Fausto, thank you, my brother, for the warm welcome. It's always good to be with you, my brother, and fired up and ready to go. Quick reminder, I'm not a registered investment advisor. I'm not a broker dealer. I don't play one on TV. Obviously, any sort of investing involves risk, and you kind of know that. But it's always good to pay the attorneys and get that stuff out of the way. You're going to be blown away. I promise you're going to be blown away from this presentation. There's no way that you all woke up this morning and expected to be in this brief. So here we go. And that's what's the beauty of life, right? So let me get a show of hands or just, comment in the chat box. How many of you woke up this morning and said, thank you? And it doesn't matter to who, the universe, God, the cat, yourself. Man, you woke up this morning. You had a roof over your head, most likely, running water, maybe somebody who loved you, a pet, family. You're on the internet right now, folks. I mean, we need good, awesome. Ishan did not wake up full of gratitude. Well, I will pray for you, my friend. So I did, right? And then I went to yoga, right? What's this have to do with investing? Well, how about Ray Dalio, right? I did my morning meditation. I do my afternoon meditation. You'd be absolutely surprised at a little bit of gratitude, a little bit of meditation, how it can center you to be a better trader. I've been doing this for over 3 decades, 1991, folks. 90% of trading is emotional. And the things that I'm going to talk to you about today, is going to blow you away. It's going to help you fill you with some gratitude, because we're going to talk about making money, which is great, right? But you're also going to be helping to save and change lives. You ready for this? So my mission objective for this brief is to brief you why this sector is not about to explode. It's already exploding, and it just might save the world. And I'm going to show you how you can profit while also helping to save and change the lives of others, and maybe even yourself. Real quick, Fausto introduced me. So briefly, you can call me Wiz. I'm Matthew to my mom or my wife if I'm in trouble. U.S. Navy fighter pilot for 15 years, graduated from the Navy Fighter Weapons School, which you all call Top Gun, where I was a bad guy. I was an adversary pilot, deployed on board Abraham Lincoln and Kitty Hawk, Operation Southern Watch, and then deployed also for Noble Eagle and Enduring Freedom. What's this have to do with trading? Everything in my life. Why? You don't join the Navy to get rich. You join the Navy to see the world, fly airplanes off the pointy end of a boat, and deliver serious justice to bad guys around the world. But I was always interested in trading, right? I knew I wasn't going to retire from the Navy and, make a ton of money. So in the ready room, in between flights, going to the base library. That's how old I am, folks. Before Al Gore invented the internet in the early 90s, I'm driving to the Naval Air Station Library to read about investing in stocks and options. So I taught myself how to trade. But guess what? I also figured out that trading is a form of combat. Somebody's going to win and somebody's going to get their rear end handed to them. Which one do you want to be, right? So I started applying everything I was learning as a fighter pilot, having a strategy, implementing tactics, contingency planning. Before I even got airborne, knowing what I was going to do if something happened. How about managing risk? All right, this guy's going to give me a brief on risk management, and he's showing me a picture of him being inverted over Top Gun. Yeah, I am. Options traders, fighter pilots, want to minimize all known risks. Why? Because we want to win. How did Top Gun options start? Well, sadly, a tragedy. On the morning of 9/11, I was getting ready for my first flight as a pilot for American Airlines. I had just left active duty, got hired by the U.S. Navy Reserve to fly F-18s out of Fort Worth, and I was living the dream as a pilot for American Airlines. That was winning the lottery. Airline pilot during the week, fighter pilot on the weekend. I was packing for my trip. My beautiful bride came in and said, "You better come take a look at the TV. Somebody hit the World Trade Center with an airplane." I'm like, "All right, woman, I'm busy. I'm small airplane, bad weather, don't worry about it." She had that look on her face. So I went out in the living room and I saw what you all saw. Not a cloud in the sky in New York City and a big smoking hole, not a small airplane. So I was going through my mental aviation checklist of how that could have happened, and the next plane hit. In a half a second, I knew we were under attack. I ran into the bedroom, threw my boots on, my flight suit. I moved my American Airlines uniform out of the way. It's still in my closet today, 25 years later, in the plastic from the cleaners to remind me of that day. Raced out to the Naval Air Station where I briefed with one of my squadron mates and the F-16 squadron next door. They were tied into NORAD, to North American Air Defense, and we started a combat air patrol, forcing aircraft to land. They got airborne. Gruff and I were at the end of the runway. By the time they hit their bingo fuel, everybody was on the ground. So what's this have to do with trading? Hell, guess what happened? A week after the attacks, I got a letter that said, "Dear crew member, you're furloughed." Furloughed's a polite airline term for you're fired. So man, I had used all my savings to buy a house after the Navy. I was broke. So I turned my attention to trading full time. Before it was a hobby. Now I had to get serious. Guess what happened? I ended up, and my results turned out I was printing money. Guess what happened? I popped up on the radar of one of the largest volatility options trading firms in the world, headquartered right there in the CBOT, the Chicago Board of Trade. Everybody take a look at those big windows. That was my trading firm. That's the inside. I helped build a hedge fund when I was there. I helped build the retail brokerage some of you might have traded with called Options House. And it was a blast. I was the managing director of strategy for this multi-billion arb firm, and I was the founder and CEO of the Options News Network, ONN.TV. CNBC at the time with, John and Pete Najarian, they were paying lip service to options. We did it 24/7, man. I shot on the floor of the CBO and the CBOT, giving you all a behind-the-scenes look at what was going on. I jokingly tell people I felt like Eddie Murphy in Trading Places, right? Valentine, some poor old retail trader going to the big leagues. But I found out, ladies and gentlemen, the smart money ain't that smart. How do I know that? Because I wrote a book about it. I made $2.5 million in 2 weeks during the COVID crash as Bill Ackman, Kyle Bass, Jeffrey Gundlach were literally crying on CNBC to shut the markets down, right? I remember that tweet from Donald Trump. Stocks are looking good here. I'd be a buyer of stocks. The next day, the markets imploded 3,000 points. I made $750,000. So, ladies and gentlemen, the smart money is not that smart. I've been in the rooms with people. You, me, us, we are the smart money. Also, I have a podcast called the Max Afterburner Podcast, ranked in the top 2.5% on the globe. But here is my presentation. You're going to be blown away by this, I promise you. This is my passion. Aside from putting the ladder down to help people trade and make money, this is what I do. The No Fallen Heroes Foundation. We're a 501c3 that provides healing grants for veterans, first responders, and their families to do something. And I'm going to brief you on the something, and then you're going to see how you can potentially get filthy rich while helping save lives. Why did I start the No Fallen Heroes Foundation? Well, sadly, or not sadly, because it's where I am today. I was born and raised in South Jersey, South Philadelphia, one of 6 kids, typical Irish Catholic family. I think we made the Pope look Jewish. I mean, I was an altar boy, Catholic schools. It just did not, we were that family. My older brother and my 2 sisters were going to college at Villanova University. And my sister Monica, they were all at a fraternity party one night. And my brother and my sister Marilyn said, "Hey, Monica, we're heading back to campus. Do you want to ride?" She said, "No, I'm catching a ride with these guys." And they were hit by a drunk driver. My sister was thrown from the car and she broke her neck and she was killed. Brutal. I was 8th grade. I was going into high school. Tough time for a young man anyway, going to an all-boys Catholic high school, St. Augustine Prep. My family, it was a hand grenade in the middle of my family. My parents were gone. My dad died years later of a broken heart. Incredibly tough childhood. I was also sexually abused as a child. So what do you do with a childhood like that? You go into the Navy, right? You go into the military. Let's run away from that trauma. Ladies and gentlemen, in 15 years of flying fighters, I lost 16 brothers. Not a single combat loss. This was all bad weather, mechanical issues, stupidity, act of God. It was, you name it. 16 people gone. Along the way, I lost 4 F-18 brothers to suicide, including my best friend, Captain Eric Swenson, right there, Swede. Marine F-18 pilot. He was a groom. That's my wedding day. My best friend, Swede, beautiful bride, 5 kids, checked out. I looked at my bride and I said, "We have got to do something about veteran suicide." But my transition, ladies and gentlemen, from military to civilian was incredibly bad. I'm going to be brutally honest, folks. I had some horrific dark nights of the soul on Wall Street. What do I mean by that? I made more money in my first bonus on Wall Street than most people will see in their lives. Did it do anything for me? No. It hollowed me out. When and no offense to Wall Street people, but I worked with people who would push their own mother in front of a bus for $1. And I'm not joking. I was separated from my mission, from my God, from my wife, from my kids. I went from a fighter squadron where you trust the men and women in that organization with your life, or they're not in it for much longer, to a Wall Street firm where people wear golf cleats to step on you as they climb up the ladder. It was an absolute horror. I had some pretty bad dark nights of the soul. If it wasn't for my bride and my children, I probably wouldn't be speaking to you today. So as I'm circling the drain up in Chicago, then we moved down here to Florida, and Swede checks out, man. It hurt. That's when I found out that on average, ladies and gentlemen, 22 veterans check out every day. And I hate putting this out to the universe. I hate even talking like this, but I'm going to say it. Could you imagine, God forbid, 22 children, not once a year or total in a year, 22 children were killed every day at school? This country would flip the hell out and act. But since it's the veteran community, we all just, kind of, well, that sucks. Thank you for your service. Let's move on. So 5 years ago, ladies and gentlemen, I said, I'm going to do something. I got to end veteran suicide. But what do? How do you keep a veteran from killing themselves? Help them pay the rent, write a resume, buy a suit? Clueless. Around that time, a buddy of mine came to me and he said, hey, there's a group of Navy SEAL veterans and Special Forces vets that go down to Mexico and they do psychedelic assisted therapy. And there's a really cool group going in a couple weeks. Do you want to give it a shot? I looked at him and I said, man, go to Mexico and do drugs with Navy SEALs? That sounds like a great weekend. Sign me up. I had no clue what I was in for and how it would change and save my life. How many of you have seen the movie Lone Survivor or read the book Lone Survivor? The book is obviously better than the movie. So 4 years ago, I'm glad I'm doing this brief today. 4 years ago yesterday yesterday is my 4-year anniversary of my rebirth. 4 years ago yesterday, I flew into San Diego. Why? Because if you do what I'm about to tell you and what you can invest in San Diego today, you're a felon. If you do it an hour south on the coast in Mexico at a beautiful clinic, it'll save and change your life. So I met these 4 other incredible human beings in San Diego. That's Marcus Luttrell. Any of you invest or know Black Rifle Coffee? That's JT, Jared Taylor. He was an Air Force JTAC, like a combat, a forward air controller. That's JJ, John Jones. He was a Navy SEAL officer. He served with Marcus. And then we had a civilian joining us. Anybody an Iowa Hawkeye fan? This guy's name is Robert Gallery. He was an All-American at Iowa. He just got into the College Football Hall of Fame, as a matter of fact. And then he played for the Raiders. This guy, I rode in the car with him. We did a little convoy from San Diego down to this retreat center. I sat next to him in a car. He was dead. 6'7", 300-pound, dead walking human being. He was on his last legs. Now, you can go listen to one of my podcasts where I debrief this entire experience, but for the sake of time, and I want to share with you how all the power of all of this stuff. This was without a doubt one of the, I've done some very challenging things in my life, folks. Landing an F-18 on a carrier at night in the middle of the Pacific, low on fuel, bad weather, was a walk in the park compared to this. This was a 12 to 14 hour ass kicking. It wasn't fun. It wasn't recreational. It was extremely challenging. It healed 4 decades of trauma. I was a drinker. I don't know if you can be a good drinker. I was a bad drinker. Up to a year after a single dose of ibogaine, the medicine we'll talk about in a second, I couldn't look at or smell alcohol. It made me ill. I got to experience my sister. I got to experience my father. And I got to reconnect with, I lost my faith for decades, folks. What type of God kills your sister and has you sexually abused? I reconnected with my faith. Again, I listened to the Max Afterburner podcast, episode 7. You can get the full debrief. But here's what I'm going to tell you. I got home and I said, this is how we're going to end veteran suicide. So guess what's happened in the past 3 weeks? I'm going to step through something real quick, and you're going to be blown away. And as I'm talking, it's funny because I have this publicly traded psychedelic stocks over here, and they're actually rallying. I wonder if they're listening to me. So I'm that guy, right? On April 29th, I had a calendar reminder on my phone. Why? It was the 100-day point of this administration. That popped up on my calendar, and I said, well, if I hadn't heard anything from this administration on this issue, I'm going to take a flamethrower to them. And I did. Guess what happened? I blasted the Secretary of Veterans Affairs. We need your leadership ASAP. People are dying. You need to go full throttle on this issue. He answered me. As I said before, we're looking, I'm not going to click on this, it goes to his tweet. But anyway, the Secretary of Veterans Affairs answered me. Guess what happened the next day? I woke up to a direct message from the Secretary. Hey, Wiz, I need your help. I see what you're doing. You're doing some good work. Can you reach out to my chief of staff? And we'd love to talk to you. I was blown away, folks. Then what happened? 2 days later, in a cabinet meeting, I've never in my 57 years on this planet heard a president of the United States say the words veteran suicide. But after, and I'm not digging the cabinet meetings right now. It's like a self-licking ice cream cone. I don't like it. But anyway, Secretary Collins gave his little 1 to 2 minute, hey, here's what the great things going on at the VA. President Trump leaned forward, looked at him, and said, what's going on with veteran suicide? My wife ran into the office because she heard me yelling. She thought something bad happened. Then what happened? The VA secretary looked at the president and said, well, we're throwing a ton of money at veteran suicide, and it ain't working. The numbers are stable, if not going up. They're going up. And then what he said after this was the culmination of 4 years of a hard grind. He said, Mr. President, there's nonprofits out there doing some good work using psychedelics. We're going to look into it, make sure it's safe and everything like that. But I'm really positive that psychedelics can help heal our veterans. Ladies and gentlemen, I was absolutely blown away. Then what happened? This is all in the span of the past 3 weeks, ladies and gentlemen. I flew up to DC. Why? Because I was going to the National Press Club for a federal summit on psychedelic medicine. I talked to the chief of staff for Secretary Collins. I said, hey, I'm going to be up there next Thursday. I can come by the office on Wednesday. Guess what happened? They said, yeah, we'd love to meet you in person. I went into the VA, ladies and gentlemen, which is shocking to me. I didn't go to the VA building as a patient or a protester. I went from the border to the Beltway. Guess what happened? Here's what's funny is I go to the VA, go up to the 10th floor. It's overlooking the White House. And I'm talking to these people, the chief, like the heavies at the VA. And at one point, the lady, the chief of staff, halfway through, at about 30 minutes into our meeting, I'm on a roll, man. I'm briefing her, and these people are on the edge of their seat. She picks up her phone and starts texting. And I'm like, well, that's rude. I wouldn't do that. Now, in hindsight, I think I know what she was doing, right? The first half an hour was feeling me out, like, is this guy nuts or is he on the level? Because after she put her phone down, like 1 minute later, in walks the Secretary of Veterans Affairs. Secretary Collins came in and said, Wiz, I heard you were in the building. I want to come and shake your hand. And I said, well, Mr. Secretary, that's pretty awesome because I'd love to shake your hand. And I briefed that guy and I said, Mr. Secretary, this saved and changed my life. Me, Marcus, thousands and thousands of veterans have gone to Mexico, Costa Rica to do this therapy, and it worked. Trump's VA secretary meets with psychedelic therapy advocate to discuss expanding access for military veterans. When I'm going to ripple through this because we have to talk about the stocks and the investing. When I was meeting with the secretary, 2 lawmakers sent him a letter. You know who one of the lawmakers was? Lieutenant General Jack. Did you hear that? Jack Bergman. This guy is a 3-star Marine general, retired, who was a naval aviator like me. It doesn't get any more Republican military than Jack Bergman. And then Congressman Lou Correa, who's a Democrat from California. Talk about bipartisanship, man. They're like the odd couple. Meat-eating Marine and a liberal from SoCal, both united in this to get psychedelics to our veterans. Guess what happened when I was in DC? The president announced his new Surgeon General pick. This doctor, ladies and gentlemen, said that psychedelics helped save her and helped her find love. The Surgeon General nominee, and then guess what happened about 3 days ago? The FDA commissioner. Exploring psychedelic medicine is a top priority for the Trump administration. Holy shnikes, ladies and gentlemen. I am blown away. 4 years after going to Mexico to the month, this is happening. So this is the way. This sector is exploding, and I'm going to get into it right now. So we give healing grants to veterans, first responders, and their family members. Venture capitalists, Wall Street is piling into the space, and we're going to brief that right now. Real quick, though, it would infuriate me hopping on an airplane to fly to San Diego to drive to Mexico. It would infuriate me getting on an airplane in Fort Lauderdale to fly to Costa Rica. I'm having to take young men and women who incurred trauma serving this one to another country to heal? Thank you, voters in Colorado, Oregon, New Mexico. These medicines are legal at the state level. We have done 6 healing retreats, finally, in the great United States of America. Last week, ladies and gentlemen, the state of Texas, doesn't get any more Republican or red, approved a $50 million initiative into the medicine I sat with called Ibogaine. And we're going to talk about that. But right now, ladies and gentlemen, I'm going to give you this pie chart for free. This is the Psychedelic Alpha. It's a great website, Psychedelic Alpha, the bullseye. Let me go give you this so you have this as a resource. The psychedelic space is exploding. You can click on the pie and you can zoom in. Let me give you this so you have it. There are several publicly traded psychedelic companies that I would buy with both hands. Let's just drill in a little bit here, okay? Now, so John, absolutely, right here, John, great question, my brother. I sat with this. Ibogaine is the most powerful psychedelic on the planet. So John, we helped a Navy SEAL who was a breacher, right at the door, explosives, concussion, traumatic brain injury. His brain scans from the VA were dark and gray and black. 3 months after sitting with Ibogaine, they were completely clear. Ibogaine has incredible neuroplasticity. It regrows dead or damaged neural pathways and creates new ones. Folks, I'm going to be honest. I didn't go to Mexico to be a better trader or pilot or anything. However, I went to go be a better human, father, husband. But guess what happened? When I got home, it was like Neo in the Matrix with my trading and everything in my life. It's like God, I choose to use the word God, scrubbed my brain and my vision, and I saw everything in a different light. So great question. I'm glad you asked that. They are doing studies into Alzheimer's, Parkinson's, all sorts of neurological issues. Absolutely, John. You are never too old, my brother, to receive healing. So this pie chart right here, this public company, Atai, Let's go take a look at a tie ripping recently. ATAI, a tie. In the past week, folks, it went from $1.40 all the way up to, folks, this is up like 50% in a week. It's up 8% today, ladies and gentlemen. Let's just do this real quick. 41%. Sorry about that. It's up 41% essentially in a week. Okay. These names are exploding. 8%. It was up 10% the other day, another 10%. A tie I would buy with both hands. And before I really rip into these names and give you what I'm investing in the psychedelic space, let me be clear. I'm torn about this. What do you mean? Folks, I have a ton of money in this space. I am an investor in a private company called Demorex, Dr. Deborah Mash. She is using ibogaine to cure AUD, alcohol use disorder. I just told you I couldn't even, looking at somebody having a drink made me sick. It can cure AUD, alcohol use disorder. 39 million Americans, and I think like several hundred million in the world suffer from AUD. Here's what I'm getting at about that. Because Dr. Mash, let me give this to you if you're interested. She did a brief with us the other day on investing in Demorex. And I'm bringing this up because I don't want this to happen, but I want it to happen. Where's Dr. Mash's brief? If you really want to date her, she's known as the queen of ibogaine, Dr. Mash. She's been working with this compound since 1993. But let me brief you on something because, oh, here it is. It says Demorex, Dr. Mash. Sorry about that. If you're interested in this, but here's what I'm not thrilled about, but I'm thrilled about. And that might sound confusing to you, but let me brief you on this. There is no way, ladies and gentlemen, if you're sitting in the headquarters of Johnson & Johnson or Pfizer or Moderna or Eli Lilly, that you're going to let some little Demorex company cure AUD. There's another company we're going to talk about in a couple of minutes called MindMed. MN. This is another one you need to buy with both hands. MNMD. Write these down. Look at MindMed the past couple of weeks. It went from 6 all the way up to 8. These names are good. It's up 4% today, folks. If you're Pfizer, any of Big Pharma, you are not going to let this happen. So here's why I'm torn. My prediction in this space, ladies and gentlemen, and I know it's going to come true. They are going to swoop in soon with their size 12 checkbooks and stroke a big one and buy all these companies. Folks, Janssen, look at the center of this bullseye. The center of the bullseye, I mean it's approved and it's currently on the market. Does anybody know how much money Spravato, ketamine, brought in last year? In a year. 1 year, ladies and gentlemen, for Janssen. Anybody want to take a guess? I'll give it to you. $1 billion. Not in like 20 years, folks. In a year. So what I'm getting at is all of these companies, and we're going to talk about these companies too. Compass, Cybin, those are publicly traded companies. Lycos is private, but you have probably heard of them because they're working with MDMA. So as an investor, I want Big Pharma to come in with their size 12 checkbook and buy it. You will, if you don't invest in these names today, you're going to shoot me an email in a year and go, I'm furious at myself, Wiz. I just saw on CNBC, breaking news, MindMed has been acquired by Pfizer and the stock is up 1,000% right now type of thing. That is going to happen. Now, what Big Pharma does with these names is up to them. What do I mean by that? They might buy these things, folks, and do what with them? Put them on the shelf. I'm not going to tell you anything new right now. There is no money in healing. Big Pharma wants customers. They don't want healed humans. So this is what I don't want to happen is them to buy this stuff and put it on the shelf. But don't forget, ladies and gentlemen, God the universe, divine, truth, creator, you choose the word, I choose God, put these things on this planet for us to heal. Ibogaine comes from iboga. It's root bark from Gabon, Africa. Psilocybin you might even have in your yard, right? LSD comes from ergot. So here's what sucks is they could buy, I'm going to buy Demerex and change a molecule and call it ibogaine and we're going to charge $30,000 for it. That can happen. As an investor, I'm going to be thrilled because I'm going to print money on that. As a healer, as somebody who wants these medicines accessible to everybody as much as possible, that's going to suck, right? But you're here with Fausto and CTU and this great couple days of trading. You want to make money? You buy the psychedelic names today. You should have bought them a year ago. But anyway, let's go. I'm going to ripple through the names that I would buy with both hands. Let's start again with a tie. The first one is a tie, ATAI. The volume has been exploding in this name for the past couple of weeks. Why? Ladies and gentlemen, when the damn FDA commissioner, what was this, 3 days ago says, this is our top priority. He's the guy that's going to lead the rescheduling of these things. Remember, and we're all going to have a laugh right now. Let me go find this. It's not going to be a funny laugh. It's going to be a pissed off laugh. What do I mean by this? You're gonna get it when I show you. Where is it? Harm. Where? Is it in downloads? Let me look for the harm scale. This sucks because everything I'm talking to you about right now, ladies and gentlemen, there it is. Let me pull this up and show you. You ready to be pissed off? Ladies and gentlemen, the ibogaine that I did in Mexico is a Schedule 1 drug. It's a felony. The definition of a Schedule 1 drug is no therapeutic use and a high risk of addiction. Did you not hear me talk about ibogaine? It was the most therapeutic thing I've ever done in my life, and it destroyed alcohol. Hell, I couldn't drink coffee for 6 months. It destroyed everything in my life that was addicting. Illegal. So let's take a look at this chart. Alcohol, tobacco. This is harm to others and to you, right? Harm to others is red, harm to you is blue. Alcohol, tobacco, 100% legal, baby. Psilocybin, which can't hurt anybody else and barely you, is a felony. It's a Schedule 1 drug with no therapeutic use and a high risk of addiction. Hell, look at LSD and ecstasy compared to tobacco and alcohol. The definition of no therapeutic use and a high risk of addiction is alcohol and tobacco. Why am I sharing this with you? Because the damn FDA commissioner is going to be one of the ones that would have to lead the effort to reschedule those things. Folks, ketamine, if you've heard of that, is a Schedule 3. So my ibogaine, the psilocybin we do in Oregon or Colorado, needs to be rescheduled. Have any of you seen, I'm not going to watch it, I'm going to share it with you, and I'll give you the cliff notes. How many of you have seen this clip with RFK Jr.? When RFK Jr. was running for president as a Democrat, he was asked, I'll find the clip and share it with you because it makes me tear up every time I listen to it. So I'll pause it and give you this link. He was asked, how do you feel about psychedelics? What was his answer? He said, well, I'm a recovering heroin addict. And when I heard about this, and I'm a recovering alcoholic and a heroin addict, and it just sounds like the dumbest thing in the world, psychedelics. That's up until my wife, sadly, took her life in 2012. After my wife committed suicide, one of my sons was done. I could tell it was over with. He was next. A buddy of his put him on a plane and they went to Peru. And when he got back and I saw him for the first time, I knew I got my son back. Ladies and gentlemen, this guy went from I'm a heroin and alcoholic recoverer. Psychedelics sound awful to it saved my son's life. So RFK, the FDA commissioner, the Secretary of Veterans Affairs in a cabinet meeting, for God's sake, told the president about psychedelics for veterans. So either this is going to happen. I mean, this is common sense. It's either going to happen or it's not. And it looks like, ladies and gentlemen, I think Fausto and this group, look at the tie just popped another percent in this brief. If you guys are buying it, you are moving this right now. Let's zoom in a little bit. That's us, man. Look at this. We got into this brief and it's been level, and I guarantee you that's you guys pushing this thing up. Look at that. I guarantee you, folks. Look at the volume spiking as we're doing this brief right now. Folks, it's $2. Throw $1,000, throw $2,000 at it right now. Or, I'm an options trader. Let me give you my rule of thumb, though, as Wiz, the options trader. I don't trade options on stocks under $10. Why? That's the option. The stock is the option. It's the same premium, essentially, almost. But if you're kind of cheap, here's what you could do. Go out to November. Go out to the fall. Go out to November of 2025 and buy some upside calls, right? I mean, there's actually some activity in these, down here. Yeah. I call these lottery tickets, man. If between now and November, you see that breaking news on CNBC, breaking news, a tie has been acquired for whatever, these things are your retirement. So I'm of the strong opinion that Big Pharma, let's go back to our psychedelic wheel, is not going to let this succeed. I mean, Janssen capitalized it right there with Spravato, which is great. And then look at this. S-ketamine is getting ready to be approved for suicidal depression. So let me get back to rippling through the names so you know what I'm investing in. And I'm going to give you some infrastructure names too. So Atai, we already covered. MindMed. Let me show you a recent research report on MindMed. Don't trust Wiz. I mean, I would, but let me give you MNMD, MindMed. Here it is right here. Let me show you this research report on MindMed. So when this report came out, the stock was around $5. They give a $25. This is Oppenheimer. This ain't Wiz. I think it's low, but they give a $25 price target. Why? On the medicine called MM120. What does this treat? GAD, generalized anxiety disorder. Why is my scroll wheel not working? Folks, I forget how many millions of Americans suffer from GAD. It's somewhere in here, folks, but generalized anxiety disorder. A single dose of this medicine, I think you can Google all this stuff and read these reports on your own. I think it was like 80% were cured. Did you hear me use that word? I didn't say treated or 10% felt a little. Hell, man, 10%, with a drug feels better. That's considered a success. 80%. So MindMed is the other name I would buy. Cybin. Everybody knows Stevie Cohen, right? Steve Cohen from SAC Capital. If you watch Billions, right? Stevie Cohen. He has pumped a ton. Just Google Cybin, CYBN, and Steve Cohen. Steve Cohen, one of the largest hedge fund managers on the planet. Extremely bullish on psychedelics. His son, former Marine, healed with these medicines. Another big name, Compass. Write all these down. CMPS, Compass Pathways. Another really strong name. Wow, look at that pop. Another really strong name, ladies and gentlemen. You know what, Wiz? I suck at picking stocks. Don't. Let me give you an analogy here. Fausto and I were day trading right around the .com boost. This is, when I look at some of these names, I'm telling you, this is the internet 1999. What do I mean by that? There's a Netscape and a pets.com, and then there's an Amazon and a Google. You pick the right two, you're rich for the rest of your life. You pick the wrong two, you're broke. So instead of picking winners in the psychedelic space, how about you go take a look at this man? PSIL. PSIL. It's the psychedelic ETF. Let's go take a look at what's in PSIL. There we go, right here. You don't have to pick. Look at what's in PSIL. MindMed, Atai, Compass, Cybin, the four I like, and then you get Quantum, NRX. Oh, this is the one with that depression medicine, the ketamine. Sage, I like Sage Therapeutics. GH Research is another solid name. So look at this, folks. Don't pick winners. Go pick a basket of them. It's called an ETF, Exchange Traded Fund. Now, if you're sitting here going, exactly, John, isn't this awesome? I hope that's a good thing. You can't believe what you're hearing. And I know Fausto's a crypto guy. I love my crypto brothers and sisters. I don't get it. I'm like a caveman staring at a wristwatch with crypto. Here's what I do get. The underlying. I like the power. I like the chips. I like the networks. I don't get the Doge. It's a dog or coin or a ether this, crypto, whatever. I don't even, Bitcoin. How about the infrastructure? Let me tell you something real quick. So I am on the board of advisors for a REIT called Healing Realty Trust, HRT. What's this have to do with anything? Ladies and gentlemen, when, not if, these medicines become legal for therapeutic use, you're not going to be doing them in your doctor's office, right? You're not going to be doing MDMA, a 6-hour MDMA journey on wax paper on an examining room table with some National Geographics from the 70s on the table, right? So I'm in a private REIT right now. Why? Because we are scooping up existing hospital campus spaces, right? Remember years ago, I'm old, there was no urgent care or dialysis centers. You went to the hospital. Guess what? I live right near Boca Raton Hospital, folks. There, within a mile of the hospital is a massive campus. So we are building the infrastructure for when these medicines, these are all existing medical complexes that we're going to repurpose for what? These medicines, right? If you're going to go do a journey, you're not going to be, in a regular doctor's office. It's got to be a big room with a couch and a separate bathroom and 2 chairs in there for the people holding space. And, it's going to be filmed and everything like that. That infrastructure doesn't exist. Well, Wiz, why are you telling me about a company, a private REIT that you're an investor in when I can't get in it? Because there's 2 companies right now who are copying us. AHR, American Healthcare REIT. They went public a year ago. You want to take a look at how the stock did in a year? Last February, AHR went public. Look at them today. The stock is up 166% in a year. American Healthcare REIT. Now, let me show you something. They're printing money like we are. They have a 3% dividend. Whoa. I'm going to do you one better. Sabra. SBRA. Sabra Healthcare REIT. The stock is a little bit more stable. It's not, super up and to the right. It's kind of hovers. But look at this. I mean, when I told my folks to get into it, when was that? About a year and a half ago, 2 years ago, it's up 54% since I told, let's move that a little bit. Yeah, 55%. This stock is up 55%, but check this out. 7% dividend. You know what Uncle Wiz does? He buys these shares. I get a nice dividend, and I sell upside calls against it. It's called a covered call. I'm making a nice 5 to 10% a month on Sabra, SBRA. I can sell a cash secured put on it, do a covered call, and get a 7% dividend with a name that's copying what I'm doing in my REIT, Realty Investment Healing Realty Trust. So, ladies and gentlemen, if you're sitting here going, I don't know, is these psychedelic? These are biotech names, folks. I'm telling you, these are lottery ticket plays, over here in the psilocybin, thing. And I get it. Then kind of like the crypto, the meme coins, don't try and pick some winners from the bullseye. Go pick the infrastructure names that are giving an incredibly solid dividend. Isn't that cool? I'm in both, man. I'm in Demorex up here on the advisory board. We had opened the doors. Dr. Mash came in and gave a presentation last week to my Top Gun Options members. I think we got 30 new investors into Demorex. It's a private. If you're interested, you can shoot me an email. I'd have to check with the CFO to see if there's any more room. And then yesterday, any hockey fans in here? Yesterday, Daniel Carcillo, he's a brother from another mother. He's got a place out in Oregon called New Growth Connections, and he's opening a place in Colorado. He's looking for investors. So I think as of this morning, about 11 current TGO members reached out to Daniel and said, hey, I'd love to invest in New Growth Connections. He's the clinic in Oregon is printing money. He's got 4,000 people on the list to do a retreat in Oregon at his place. $2,500 for a weekend. The guy, I'm on the board. I have equity in the company. It's printing money too. I'm not here to talk about that stuff, but if you're interested, you can always shoot me an email and we can see if you can get in there. But yeah, Daniel Carcillo is a 2-time Stanley Cup champ with the Blackhawks. I hated him on the Blackhawks. I loved him when he was on the Flyers. But he's on the board of our foundation, folks. Why? Google Daniel Carcillo fights. Google and see what he was. A goon, folks. Blood on the jersey, no teeth, 7 concussions, and the man was on death's door. 7 diagnosed concussions. Guess what happened? He healed with the medicine, folks. He is a incredible human being. He's helping. He and I are doing a study out at Experience Onward in Oregon. He's got NFL Super Bowl champions. He's got NHL Stanley Cup champs. I have veterans with traumatic brain injury. We are doing a study with psilocybin to heal these folks. So yeah. Dan, you know what? Dr. Mash covered this. They are actually doing some research into autism and how it is these medicines are potentially helping with autistic folks. It helps them relax in certain situations. I'm not going to fully speak to that. I'm telling you, there is active research going on. I think if you dig into the psychedelic wheel, my brother, I forget who is researching that, man. But is it Delix? Oh, hold on, man. It's jumping around. Well, down here, there's Parkinson's research. You do a little. Is it these guys? Awaken. Long answer, short question is yes. I am hearing good things. So, folks, it's almost like, again, I choose to use the word guide. It's almost like some entity that put us all here also said, you know what? I'm going to put some stuff on here for you guys to heal too. Robert, it does not. As I'm sitting here talking to you right now, Robert, I have horrific tinnitus for the rest of my life. But Robert, if you listen to my podcast debrief, for months after the medicine, my tinnitus was, I didn't notice it. It was still there. It helped me deal with it, Robert. It completely changed how I view this tinnitus. And how much time do I have left? I don't want to eat into somebody else's time here, but Robert, do me a favor. It's called the Max Afterburner Podcast, episode 7. I'm glad you asked, man, because I had struggled with my tinnitus. And it completely reframed how I deal with it. And I'm not gonna steal my thunder from my podcast. Episode 7, my brother, is where I talk about that because man, I'm like you. When I try and meditate in the morning, I can never sit in silence for the rest of my life. It sounds like, flying fighters for 15 years. I'm reminded of it for the rest of until I die with this tinnitus in my head. But man, it completely changed how I deal with it. So I want to hook you up with that. All right. Hey, I think I ate into my pitch here, but AR, the Accelerated Retirement Brief, every Wednesday at 10 a.m. is we look at longer dated trades and psychedelics and stuff like this, things that are potentially explosive. When I used to drink, I'd say $96 is a cheap bottle of wine. Since I don't really drink anymore, what can I say? It's a nice dinner, folks. $96, 30 days. It's $96 for the rest of your life if you want to stay in there. Try it out for 30 days at $96. Most people email me like after a couple months ago, dude, put me in the annual so I can save a little money. I'm ready to go. Or do the annual out of the gate, folks. But this is the portfolio. The Accelerated Retirement Portfolio is where I talk about all of our investing in this space. Don't do me a favor, do you a favor. Options Weapons School. You get 7 sessions for a little bit of an upsell right there, $297. You get Options Weapons School. Wiz, I have no idea what a put is. I have no idea what a call is. That's what I'm here for. So down here, our Options Weapons School training, you get 7 sessions, starting with, hey, this is the market. These are stocks. These are options. These are calls. These are puts, all the way down to advanced tactics like synthetic stock. And this one's worth its weight in gold. If you guys follow me at all on social, I shoot S&P 500, what I call sniper shots. We shot one this morning that made, what was it, 60%, $1,200 in 21 minutes. Men lie, trades don't. So I'll go show you. Where is it? Right there, folks. Boom. Tom, 50% gain. Look at this. I shot a bull put spread at the open, and I closed it 21 minutes later for a $1,200 profit. So Options Weapons. Oh, that's why I was talking about it, because that training, that session 7 gets you how I do my sniper methodology. Okay. But folks, I hope I hit my mission objective when I started and I did the whole, you're going to be blown away and you've never heard what you're about to hear. Like, okay, Wiz. Yeah, right. Hopefully that's the case. 4 years ago, yesterday, ladies and gentlemen, I sat with psychedelic assisted therapy and it saved and changed my life. There's no way in hell, ladies and gentlemen, 4 years ago, Wiz, if I heard me talking like this in investing brief, I would have kicked my own ass. If I heard me talking about gratitude, meditation, psychedelics, I literally would have stole my own lunch money. But that guy died on a mattress on a floor of a home in Mexico overlooking the Pacific. And I thank God every day for everything that has happened to me since then. I don't know too many people who can say this, but I am thankful for my suffering. I find gratitude in loss and everything that happened to me because it brought me to this point. So if you're interested, like I said, thank you, Frank. I appreciate that. If you're interested, $96 a month, man. If it's your last $96, don't do it. But if you want to hear more about investing and potentially getting into good deals like this, I think Demerex and Daniel's stuff is closed. I mean, Daniel got, I think he raised 200 grand in the brief yesterday. And then Dr. Mash, because if you don't get into these now, I think it's you have to be an accredited investor in like 250 grand or whatever that means. But if you're interested, just shoot me an email. Even if you don't join Accelerated Retirement and you have questions about potentially healing with these medicines, I'm here for you, man. And I'll end on this high note. If you know a veteran, a first responder, or a family member who's in a bad place or needs a little help, do me a favor and send them to our website, nofallenheroesfoundation.org. Right up here on the top right, they can apply for a grant. Okay. And that will get them in our system. I think our next retreat is up in Oregon in a couple weeks. And then we have another one in Colorado shortly. So veteran, first responder, or family member, we're here for them. Sadly, I mean, our waiting list is kind of big, folks. And obviously with the market volatility and, uncertainty, our donations have kind of gotten a little skosh. We're on fumes. But I do, Susie and I, my bride, we kind of throw money over the fence from, Top Gun options into the foundation to kind of keep us going. So awesome. All right. I took us right up to the deadline there. Fausto, my brother, thank you again for having me. I appreciate this platform, this opportunity to be able to talk about potentially investing to save and change lives. And hopefully some folks got something out of it. If not, I failed miserably. So I will throw it back to you, my brother. But once again, thank you for having me, and fights on. I still got to get you airborne too, my friend.
I will. And thanks for coming here. I know in your busy schedule, and keep up the hard work and the support and those Alex, everything that you pitched is great. Just thanks for everything you're doing, and thanks for your service, and enjoy your Memorial Day. All right.
You too, my brother. We'll see you next time. Thank you.
All right. Good. So we're going to go right into it. Looks like he is locked in right now. Let me just take over the screen. There we go. All right. So I hope everybody enjoyed that presentation. I mean, we're at the end. This is it. So we got our last presenter. I'm really looking forward to having our next presenter here. And I think you guys are going to have a great lesson learned, a little bit different on everybody that's here. I mean, John Koser has been a great speaker. He's our next speaker. He's been pleasure learning from him over the years. I could tell you that John Koser talks, smart traders listen. He's one of the most respected market technicians in the game. With over 40 years of experience analyzing and forecasting the market, John's a chief strategist at Asbury Research, a firm founded back in 2005. When he makes standouts in not just his experience, it's in a way he blends technicals and quantitative data, creative forward-looking, audible strategies. He's not just, reacting to the market. He's basically ahead of it. His career started back in the trading floor in the Chicago Merchant Exchange back in 1980s. I think he'll tell you a little bit more about it. I've learned firsthand how much the market really means to him and how it really moves in the market for him too, what he learned from it. He's got a real world experience building the foundation of what would become one of the most respected voices in the financial research. He's a CMT, contribute to Forbes, stock charts, regularly appears on CNBC, Bloomberg, Fox Business. You said he was there, but today we're lucky to have him on. And he's with us here at the Cyber Expo. So please just give him a big, warm welcome. John Koser, thanks for being here. I really appreciate your time. Stage is all yours, buddy.
Okay. Hello, everyone. Thanks for the nice intro, Fausto. And what I'm going to first try to do here is share my screen with you. And that should do it. Are we good?
Nope.
Okay. Let's try that again. Hang on a minute. I think I know what I did wrong too. This is always the worst part of the show. So if we can get by this, we're good.
As long as you could trade, that's all we care.
Yeah, that's right. I don't have to do this to trade every day, fortunately.
There you go. We can see you fine.
I'd be doing something else. Good. All right. So what we're going to do today is I know that everybody's here to try to learn something. I think my approach is different. Well, I know my approach is different because most of the indicators that we use are in-house indicators. We're not so much looking at RSIs and stochastics, which is how I started. But we look at, I've built a lot of indicators that I think are better, obviously. But hopefully, I'm going to show you what we do, kind of how I got there, and hopefully this will maybe inspire you to do your own thing a little bit. Be creative the way you look at markets. So let's begin. Just a little bit about me. I've been doing this for 43 years. As Fausto said, I started on the floor of the Chicago Mercantile Exchange in the fall of 1980, not because I was an econ major, but because I happened to be lifting weights with a guy that turned out to be one of the brokers in the pit. And I was strong and stout back then, and I could do math pretty fast in my head. And he offered me a job as a runner, which was $100 a week back then. So I had to immediately get a job as a bartender so I could afford my apartment and my car, my crappy car that I had at the time. But I started at the Merc. So my background is a little different, I think, than other people. I was down there for 17 years. I did everything down there but sweep the floors. I was a filling broker. I traded from my own account. I was a runner in the beginning, and it was a really great education of not the theoretical side of trading, but rather the practical side where these guys come to work every day and they have to make money in the pit. It doesn't matter where they trade, doesn't matter what they trade, doesn't matter how long they hold them, or if they're a big or small trader. But in order to keep your membership down there, you need to make money. It's sink or swim. So it was a great place for me to start. When I left the exchange in the very late 90s, I did that because I was getting a little bit too old to knock heads with the young kids there. And I saw that the Titanic had a little hole in it and it was on its way down, meaning open outcry. Open outcry. It was obvious to me that it was going the way of the dinosaur, and I didn't want to be the last guy, to leave the floor. So I left, worked for a couple of shops. I learned a lot more about equities while I was off the floor, where I was started as really more of a futures person. I quickly became an equities guy. I launched my own firm in '05. And now my son works with me. My oldest son is the math genius in the family, and we build models together. Like some dads might go fishing or go bowling or something. We build models together. It's a fun exercise for us. And so right now we sell research and we manage money both for other money managers and for individual investors. So that's kind of my short story. So I've been around. I've been doing this for 43 years, so I suppose it's just a matter of time when you're going to get on every TV show and every newspaper that's out. Personally, some of the least smart people that I've ever seen in the business are on TV a lot. So that's no badge of honor, but just that I've been around the block a little bit. So we do an educational webinar for Fidelity Investments a couple times a year. I've spoken at a lot of various events, so I've been doing this a while. Our approach. When I started, um, there were no computers. There were no computers on the trading floor. There was a bunch of guys that were walking around with a pencil and a piece of graph paper, which used to be able to buy at the Chicago Board of Trade for like, I don't know, 50 cents a piece or whatever. And guys were making point and figure charts, trying to figure out where the support and resistance levels were. Everything is computerized now, as we know. And I really kind of changed from a guy that was looking at stochastics. I was plotting stochastics by hand and RSIs to, I kind of switched over to the quantitative side. And I'll kind of show you what I mean as we get a little bit deeper into the presentation. But, for me, it's like, how do I simplify this? How do I simplify what I'm trying to do? So there's two things that we're all trying to do. One is we want to know if we should be in the market or out, or if you're managing money, how much you should be in, because typically managers can't go to cash. They need to be in the market, to some degree. And then the second part is where should I be invested so I can hopefully outperform? That's what we all strive to do, right? Is be in the market at the right time when it's going up. And the white whale, so to speak, is to try to outperform the S&P. It's very hard to do on a steady basis. So that's kind of the way we look at markets in that, two-stage approach. Should I be in, and what should I be in? So built a lot of models over the past decade, really, is when I kind of switched over from being more of a classical technical analyst that's looking at chart patterns and looking at overbought, oversold, and seasonality, and kind of all the standard stuff that I had to know to get my CMT in, it was at 1999, had my CMT a long time. I started to build models because a lot of the tools that I was previously using require, I think, a lot of interpretation and also a lot of luck. So I started to build models that were quantitative, that were strictly numbers driven. I started making more money. I started making better decisions, and I started sleeping better at night. So these are all the different models that we've built. The correction protection model has been around the longest. We built that for a lot of our RIA subscribers over the years that their clients got smoked during the financial crisis, '07, '08. They stayed too long, got out of the bottom, and then the market bottomed in early part of '08 after we fixed the car situation. And then clients were too afraid to get back in. They just lost 30% of their money in a relatively short period of time. And then there was like deer in the headlights. They're afraid to get back in. So the CPM is a binary risk on and risk off that basically gives us the S&P 500 with about 40% less risk. Our Asbury 6 we're going to look at. I'm going to show you the Asbury 6, show you the indicators we look at. So basically all we're doing is we've gathered all the indicators that I have used over my career that have worked well for me, which may not necessarily work well for somebody else, but all the ones that I really understood well and found value in, we started to build various models with them. Kind of like if you ever seen the movie Moneyball, how Billy Beane and those smart kids that he got from Harvard or whatever they were, they started to build their baseball lineup based on statistics, right? They wanted a guy that would get on base all the time, and then they had certain qualifications for each of those spots in the lineup. Even though these guys weren't the best athletes, they weren't the biggest and strongest guys, statistically, these guys did really well at one thing. I remember the catcher, they had a catcher that was the leadoff hitter. He was this fat guy that couldn't run, but he got on base all the time. He was either getting hit by the ball or he was really good at being able to, control his bat. He was on base a lot. So that's kind of what we did here is we said, okay, we need an indicator that's going to protect us on the downside. And then we need another indicator that when the market is trending our way, it gives us some added alpha. So we started to build a lineup like that. So we came up with all these different all these various models. The difference with the models is I don't have to scratch my chin at the end of the day and wonder if I'm in or out, if I've got a signal or not. I kind of rely on the numbers to tell me if I should be in or out, which takes a lot of pressure off me. It keeps me from making mistakes. It's so easy to make mistakes in these markets when they're up 100 today and down 100 tomorrow. This was to keep me, which I tend to be an emotional person. I'm half Italian, so Fausto might be able to tell you about that. But sometimes our emotions get the best of us, and it could really kill you in this business. So I built these models to keep the emotions for my friends and family and keep my brain, for the market. This is just how to get a hold of us. If you have a question about something I said today, or you want to find out a little bit more about us, or we have a YouTube channel, we have a Substack. There's a lot of ways to track us for free if you like our approach to markets and you want to see a little bit more. So let's start out with the CPM. That's the first market that we built. So CPM was meant really for old guys like me that like to be in the market or maybe need to be in the market so they can, so they can earn a return on their money that's better than the 4.25% that you're getting for a 13-week T-bill right now. It's totally data driven. It moves 5 times a year. It's in and out. That's a round trip, let's call it. It's 5 times a year on average. It's designed to protect investor assets when the market goes down and to keep the drawdowns low. The one nice thing when I came from the commodity space to the stock market space is the stock market has an inherent upward bias. Commodity markets do not have that. So we try to use that by keeping the drawdowns as small as we can, because we know over time, the market's been going up for 100 years with few exceptions. So if you can avoid some of the drawdowns, it's just common sense that, it's going to be an easier game to play, than the commodity game. At least it was for me. So again, binary, it's risk on and risk off. Here's what our risk on and risk offs look like from Q4 of 2023. So you can see it's not overly sensitive, and it tells us when the market is starting to weaken internally. Like here on April 15th, you could see it turned to risk off. So you might say, John, well, it went right back to risk on May the 3rd. Why did you get out? Because on April 15th, I didn't know where we were going to be on May 3rd. It could have been down here at 4,700. It could have been down here at 4,400. So rather than chasing the tail of the S&P 500, we're looking at about a half a dozen different metrics that we have put together as kind of a team. And I'm going to show you how we did this with the Asbury 6. It'll be a little clearer to you, to tell us when we're risk on or risk off. It's not based on what the S&P is doing or if it broke a moving average. It's based on more what I'd call secondary indicators. And again, we're going to look at these when we get to the Asbury 6. 5 round turns a year. There's no short positions in this or derivatives or futures. Annualized total return over the past 7 years is nearly identical to the S&P 500, but with significantly lower risk than the S&P. And we look at stuff like standard deviation and beta and maximum drawdown to tell us if our methodology is quantitatively sound. So if you're interested in system building and coming up with a numbers-driven way to trade the markets, strongly suggest that you start to look at stuff like Sharpe ratios, Sortino ratios. It's a little bit wonky, but it will tell you mathematically if your system's any good or not. It's very easy to get misled by how good you think an indicator is if you're not backtesting it, and if you don't understand how some of these risk-adjusted return metrics like the Sortino and the Sharpe ratio are. All this stuff is available. Investopedia.com. It's kind of like the glossary for the financial industry. It's a great place to look at up at some of these terms. In fact, these are all linked. I'm not going to go to them right now, but if we send this out to a client or something like this out to someone who's interested in us, they could basically hit all these links here and understand any of these tools if you don't know how to use them already. It can also be an alpha generator if we use leverage, if we use a 2 times S&P ETF. So I think we're going to take a look at that next. Yeah. So here's a CPM as a defensive strategy. And this is using a tool that we have had in our office for some time that allows us to quantitatively backtest our models. How far should you go back in a backtest? Took me a long time to figure this one out. A lot of people think that the farther you go back in a backtest, the better it is. But the truth is that the economy goes through cycles. Stock market goes through cycles. So if you're going back and back testing an idea that you're trading today and you're going back to the 70s or the 80s, they're not very related to each other. So going back has the effect that, man, I went back 30 years on this thing and it's great. Well, maybe 25 of those are really not what the market's doing today. So it's very easy to get lured into longer is better. Ray Dalio is a big, proponent of staying within the cycle. For him, his cycle is 5 to 7 years. That's kind of where we're at too. So when we're back testing something, it's typically about 5 to 7 years back. So during the past 7 years, the standard deviation, this is CPM, trading with SPY, your risk on, that means you're in SPY. So we are currently risk on right now and have been since April the 23rd, 24th, I believe. And when it's to risk off, we go to cash. when we're managing money for somebody or for an institution, rather than go to cash, we go to a short-term interest rate related ETF. That's going to give us that 4.25 or whatever that is annualized based on the yield. So it's kind of a dynamic stock and bond portfolio, only instead of your advisor setting you up for it 3 years ago and letting it run, we let the market tell us whether we want to be in stocks or bonds. But over the past 7 years, and you'll see the kind of numbers we're looking at, hopefully this will spark some ideas so you can maybe build your own models. But standard deviation is basically it tells you how volatile your returns are. So the S&P standard deviation here going back 7 years is 24.9. The standard deviation for this model is 13.9, so almost half as risky in terms of the variation of the returns as the S&P 500. This is year to date, rather. This is going back over the lifetime, over the 7 years, since 9/29 of 17, 16.8 for SPX, 12%. So it's about 33% less jumpy than the S&P 500. The Sharpe ratio, it measures risk-adjusted returns. It's meaningfully better than the S&P 500 at 0.76. Here's the one that means the most to me, and it's going to mean the most to most people because it is, what does your P&L look like? Over the past 7 years, the biggest drawdown that we had in the S&P was 33.9%. That was during COVID. Biggest drawdown that the model has had is 20.2%. Why does that matter? It means because you can get back to where you were before the adverse move in the market started faster, because now I only have to make up 20% here instead of 34. This is what it looks like on a chart. If you look at the S&P 500 with a hypothetical $100,000 account, we have the S&P here in blue, and we have CPM trading it with SPY, which means risk on, we're in SPY, and risk off, we're in cash. For the sake of back testing, we like to use cash more than an interest rate like BIL or something, because it's easier to tell how good the model is working when you're not, when how well you're doing or how well you're not doing is based on what the interest rate's doing. So you can see the simple takeaway here is this sticks to the S&P 500 like glue over the past 7 years, but we've got the lower drawdowns, we've got the lower risk-adjusted numbers. Here's CPM versus SPY on an annual basis from 2018 through the present. This is through a couple of days ago here, early in the year. Stays pretty close to the S&P 500. Now, if we use it as an offensive strategy, and all we're doing on the offensive strategy, because the model is solid, right? Because it's giving you the market with less risk. So you've got a built-in kind of a buffer, kind of a window in there that you can use to turn this into an offensive tool. The way we do this is we use SPY, or I'm sorry, we use SSOs. SSO is a 2 times leveraged SPY instead of SPY. So now you can see standard deviation in CPM, and we call it CPM Ultra. You could see it's a little bit more. So it's a little more jumpy, which of course it's going to be because you're using a leveraged ETF. The Sharpe ratio is about the same as it was before because the kind of built-in buffer that we've built in because the model works. It cuts your losses, but lets you basically capture the S&P 500. It stayed the same. Our maximum drawdown is a little bit closer to the S&P at 33.9 in the S&P and 31%. But if you look at the performance is way better. CPM Ultra is in green, SPX is in blue. So we got 136% and change here over the 7 years and 198%, almost 199% here. So again, it's the same. If you have a good model, which means that you're going to have a higher Sharpe ratio, for one. But if you have a good model, you should be able to use leverage with it and turn it from a defensive model into an offensive, or from a offensive model to a very offensive model, because the guts of the model is doing what it's supposed to do. It's keeping your drawdowns low while capturing as much of the upside as you can. You can see we've had a couple of pretty spectacular years here. In 2020, CPM Ultra was up 41.2 versus 16.26 in the S&P. All these other years, it did a little bit better. Generally speaking, there was 1 or 2 years where it didn't, but generally speaking, most of the time, it did better than the market with about the same amount of risk. Our Asbury 6, this is the part I hope that will kind of give you a better idea of the way we build models. I mentioned the Moneyball movie, which I've probably seen 50 times. One of my favorite movies. I love the math behind it, how these guys took a sport and they figured out what the components that they were looking for in their lineup, and they found them from these obscure places. And when they put them all together, they ended up with a really good model. So the Asbury 6, I originally built this because when the S&P started getting crazy, which was about a decade ago, by that I mean up 100 today, down 100 tomorrow, where when if you're managing money, if you're managing your own portfolio and the market's whipping around like that, I envision I'm seeing some heads wagging out there. It's so easy to get knocked out of a good idea. You might have bought the market. It's up for a couple of days, and then all of a sudden you wake up in the morning and bam, it's down 70. The S&P is down 70, and now you're going through all your charts and trying to figure, okay, what did I miss? Or what changed? Or why should I be out of here? I took 6 indicators out of a field of 40 or 50 indicators that I've used during my career that I've liked, that I've made money with. And I got 6 of them together that worked really well as a team. What do I mean by that? No indicator works all the time. There are times when the VIX was kind of useless, virtually useless. There are times when trading volume becomes kind of useless. Nothing works all the time. So we back tested about 40 different indicators and found 6 that worked really well as, if you think of them as like a hockey team. You got the Stanley Cup playoffs going on right now, and I'm a hockey fan. If your winger falls down, maybe your center comes and picks up his check, or one of your defensemen will cheat over you to the other side if the other team is coming down the wing or whatever it might be. This is meant to do that. When 1 or 2 of your indicators fail, and because the environment isn't right for that indicator, the other 4 pick it up. So basically what we did here is there are 6 indicators here that we're going to look at individually. When 4 or more of them are green or positive, we are in the market. We're buying stocks. We're in the S&P 500. When 4 or more of them are turned to red or turn negative, we're in cash. Very simple, binary, in, out. You can see it's active. When it's green, we're in, and when it's red, we're out. But it does a really good job of picking out some pretty important peaks. We got the peak here on December 16th of last year. February 21st of this year, and you could see that we've been in the market since April the 23rd. We avoided most of this. We were out from Feb 21 to March 24th. We got in for a couple days and the market turned right around again. We got chopped up a little bit here, but not much. And then we missed most of this final leg down. So the A6, as we call it, has been a slight relative outperformer versus the S&P 500 since 2017. Those are 7 years, but with a maximum drawdown of only 13.6% versus 33.9% for the S&P. All right, so what's the drawback, John? Well, it trades a lot. It trades about 11 times a year annualized. By trade, we mean from green to red is 1 round turn. It trades about 11 round turns a year annualized. Some years, it might be 15 or 16 times because this is annualized, averaged over that 7 years. So it's really active. It's not for everybody. I tend to use it as more of an indicator, but I do have some clients that actually trade this. This is what it looks like. It's updated every day after the close. And we've got 6 indicators here. We've got the rate of change in the S&P. We have relative performance between stocks and bonds, investor asset flows, volatility, volume, and breadth. They're not the S&P. They're secondary indicators, what I would call them, which means that they're not going to get directly affected by the circus that we see every day, where the market's down 30 in the morning and it's up 30 right now. This is part of our premium research service. It's not cheap, but it includes all of our models that we're going to look at today. 4 or more of these green, and you can see they all turned on April 23rd, 423, that was the date, and 424. So on April 23rd and 24th, which is right in here, is when we went back to green. We went back to buy, and that's where we are right now. This is what they look like individually. All right, so this is the rate of change in the S&P 500. It turned to positive. Now we use a 21-day baseline for these because that's a business month and that is our tactical time period here at Asbury. When you have a tactical time period, you need a strategic one too. Your tactical is what is going to take you in and out of your strategic trend that you're trying to catch. Our strategic trend is 63 days. It's a business quarter, really 63 days or farther out. So we're trying to work within the month to try to catch the quarter. And I think, and that's another thing, hopefully I can teach you today. If you're building a model, you need to know what your tactical time period is. You need to know what your strategic is. It doesn't matter if your tactical is an hour and your strategic is 3 hours, or your tactical is a month and your strategic is a quarter. You need to look through your indicators with the same lens. If you start going willy-nilly, you could always find one indicator at some time period that's going to tell you what you want to know. That's how you lose a lot of money. So anyway, so this is monthly rate of change. It turned to positive as of April the 24th. Positive. Here is the relative performance of stocks and high yield bond prices. It turned positive on April the 24th. It gave us all of this in the S&P. This is ETF asset flows. This is a total net assets invested in SPY daily. You can see this turned positive on a monthly basis on April the 23rd, right here. Gave us all of this in the S&P, and it avoided, more importantly, it avoided from March the 3rd, all of that. It's a big deal. Volatility, the VIX. Usually the most sensitive of the Asbury 6 is the volatility. It's kind of like the EKG of the market. It's telling you if the market is starting to pump a little too fast or if things are cool and copacetic. You can see the VIX drop down on a monthly basis on April the 23rd. It stayed there, but look where it is right now. It's right underneath that 21-day moving average, which is 2175. It's a tactical decision point. That means something to me. That means that even though the Asbury 6 the Asbury 6 is green, it's starting to get a little bit dicey according to the VIX. Next, volume. Cumulative volume is what I like. There's a lot of different kinds of volume. There's a lot of different kinds of breadth. I like to use cumulative volume. Cumulative volume turned up on April the 23rd, right here. That gave us all of this. It turned down on February 23rd, which avoided all of that. Again, finding different guys to play in the lineup that do different things. One guy gets on base, another guy's good at hitting to the opposite field and moving the runner over. Another guy is good at hitting extra base hits. And it's the same in the financial markets. You can find, these are all my players in my lineup that do different jobs for me and keep me from taking large drawdowns because the market inherently moves up most of the time. Here's market breadth. There's a bajillion ways to look at market breadth. This is the NYSE's AD line. It moved above the 21-day moving average on April the 23rd. So now it's moving higher on a monthly basis. Right here, gave us all this. It avoided most of this. So, but this is intraday. So I have it marked off as green because when we updated the Asbury 6 yesterday, about 2 hours after the close yesterday, this was right here. It was still up above the line. It's down underneath the line intraday. This morning when I was preparing these for you, it may be back up here now. I don't know, but it's close to that moving average. So again, it's a tactical decision point. So so what we ended up with there is of the 6, 3 of them are at tactical decision points. What does that tell me? It tells me that on more of a quantitative basis, the S&P 500 was at a place this morning where the market either needed to get off the dime and make another leg higher. The market, the S&P 500, whenever I say markets, the S&P 500 needed to get off the dime and revert back to going higher, or we were probably going to make a tactical peak and roll over. And sure enough, we were down 10, 15 this morning. We're up 30 now. We'll see if it holds. Got about 25 minutes left. I hope it does. But that's how we look at this. Even when this isn't giving us an actionable signal, it's telling us when some of the components are starting to get close to a turning point. That enables me to look at all this food fight, which is, daily trading every day, and try to make some sense out of it. That told me we were down this morning. I saw it was going on in the Asbury 6. I knew that we either needed to have a good afternoon and a good Friday, or we're probably making some kind of a peak here. It's clarity. It's so much clarity, to be able to use something like this. So this is another indicator. This is our sort report. And what this is actually a part of our Substack. Our premium service is expensive. It's $500 a quarter. It's $1,800 a month. It has all of our models. It has some instruction by us. A lot of people can't afford that, or it's just a big bite for them, at least until they get to know us better. So we've got a Substack, and the Substack is either free or $25 a month. So if you like what we're doing here and you want to get more for free, sign up for the Substack for free, or you can go to YouTube, and we have Asbury Research channel on YouTube that twice a month we do it's called Following the Money, a podcast. A lot of clips from me when I'm in the media, when I'm on Schwab Network or doing an IBD interview or something. There's a lot of stuff there. So free resource for you if you like the way we look at stuff. But our short report is one of the components in the paid version, the $25 a month version at Substack. And all we did here is a lot of the market for me is time. How much time it takes me to sort through a market that's this big. It's got 6,000 some stocks in it, thousands of ETFs. How do I find the ones that I'm interested in trading? How do I not miss the ones that look like they're just right up my alley in terms of what I look at, but there's not enough of me around to try to figure out where to look first? So what this does is this looks at, I don't know how many ETFs, thousands of ETFs. Every morning, the first thing that we do is run this at 5 o'clock in the morning, and we want to know where's the opportunity. So what we did is we took a broad group of ETFs. You could see it's crypto, US technology, emerging markets, global equities ex-US, small cap, gold, dollar, crude oil, interest rates. We got, the commodity indexes down here. And we sort them by and this is secret sauce for us. We keep the numbers to ourselves, but what has a positive trend according to what we like to look at? What has positive relative outperformance? Relative performance, meaning it's outperforming its peer, whatever its peer may be. And the third thing is money flows. We want to see expanding assets in that ETF. And every one that checks one of those boxes gets a green fill. and the other ones are red. So first thing in the morning, you take a look and say, okay, where's the opportunity today? Well, according to Asbury Research's trend, relative performance, and money flows, we're in crypto and we're in US technology. That's what's checking all the boxes for trend, relative performance, and money flows. This is updated every day. Now, from here, you might go to US technology and decide to buy the Qs, or maybe XLK, or maybe you look at the top 10 stocks in the technology sector according to market cap and see which ones check your boxes, which might be moving average cross, it might be a good looking stochastic, or whatever you look at. But this tells you from a 32,000 foot level where you should be looking for opportunities, and then you could dig down from there and use your own tools. This is our CEF model. Our CEF model was built 6, 7, maybe closer to 10 years ago. I built the CEF model because I had a model that I had built that was momentum based that killed it for like 3 years in a row. And then all of a sudden it stopped working about 8 years ago-ish. And I wondered what happened. And what happened is the sector rotation sped up. Those of you that use sector rotation have noticed, I'm sure, that it's faster now. Used to be 10-ish years ago, your average sector rotation trend, your relative outperformance trend was a quarter or two. It's now 6 weeks if you're lucky, 6, 7 weeks. Everything's sped up. So I need to come up. I had two options: either stop doing sector rotation, which I like to do, it makes so much sense to me, or I better find a better way. So what I did is Jack and I, who's my son, and he's the math whiz, I told him what I wanted to do, and he showed me how to represent it mathematically. We measured the velocity of money that's moving around these 11 sector spiders, which if you put them together, that's the S&P 500. All of these percentages here, that's the percentage according to the 11 sector spiders that each of these comprises. Technology is 24.5%. Energy is 9.4%. All these numbers add up to 100. So came up with an algorithm that measured the velocity of assets that are moving around these 11 sector spiders in 3 different time frames: trading, tactical, and strategic. And then we added the scores together, and the lowest scores are the best. Like heading into this week, technology, or XLK, it was number 1 in trading, it was number 1 in tactical, and number 2 in strategic, which gave us the score of 4. Best on the board. That means that's where the money's going. Does that guarantee you that's where the money's going to be on Friday? No. But since nobody that I've met in the business in 43 years can see the future, it's the best we've got. Where's the money going? So right now, the money is going into technology, industrials, and consumer discretionary, and it is leaving consumer staples and healthcare. So if you're a money manager, or if you're a trader, if you're just an individual investor, that tells you this is where you're looking for opportunity. You're avoiding this stuff because the money is leaving there to go here. Let's move on. These are the charts that we created to look at these over the course of a year. We call them rainbow charts for obvious reasons. Favored, anything that's favored is from 3 to 15. 3 is the best that you can get. That would mean that all 3 of them are as high as they can be. And then we have from 16 to 24 is neutral, and avoid is 25 to 33. So what you'll notice is when the model, and this is daily, this is going back a year, this is favored in green, and yellow is neutral, red is avoid. Down here is the associated relative performance chart for XLK versus SPY. So when we're up in favored territory, like we were here, this was like the end of last year, early part of this year, we get outperformance right here. When it's bumping all over here's one, when it's down at avoid and stays there for a while, that gave us all of this. So now we've been up here. We moved into favored status on April the 24th. Well, XLK has outperformed the S&P by 5.44%. That is this. So this is how these look if you want to envision, hey, how does this work? This is looking back daily over the past year and how this shows us that this shows the relationship between where the money's going and where the outperformance is. This is how it looks. So we built a model out of this. We only invest in the top 3. We update the model once a week on the weekend. So over the past 6 years, it's pretty much right where the S&P 500 is in terms of standard deviation. It's as risky mathematically as the S&P 500 is. Our Sharpe ratio is 0.93. Anything that's around a 1 or better in a Sharpe ratio is exceptional. Look at the internet and Google ETFs with a Sharpe ratio better than 1. It's a very short list, and they don't stay there for very long. Anything near a 1 or better in a Sharpe ratio is very good. Now, the maximum drawdown on the S&P we already know is 33.9. It's 29.4 here. So it's almost 5% less of a maximum drawdown in than the S&P 500. This is what it looks like on the chart. Since July of 2018, S&P 500 is blue and CEF is the green line right here. You can see that during this period through May 20th, 232% for CEF, 118% for the S&P 500. Then you also might note, well, why did it take until October of 2021 till it started to pull away? Because there isn't significant relative outperformance every year in sector rotation. A lot of years, and last year was one, all of the sectors kind of moved around. Think of the 11 sectors it's a horse race. And once around the track is a year, and the field is 11, the 11 sector spiders. Last year, all those horses stayed together for most of the year. One of them might, get ahead by a length and then pull back. Another one might get ahead by a head and then pull back. But there wasn't a lot of outperformance to be had. So the model was a relative performer last year. You can see they kind of stayed the width between them stayed about the same. In 2021, XLK and XLC took off like a shot. That was after Chairman Powell said he wasn't going to let asset prices deteriorate any further, and he kind of rescued the market from the COVID collapse. That March 27th of 2020 was that low. So we had an enormous year here where this was, the S&P was up 26.89 in 2021, and CEF was up almost 53%. So we had a huge outperformance year. We had a huge outperformance year the next year. The S&P was down 19.44. That was when we had a major downtrend in 2022. CEF was up almost 7%. So we outperformed by about 30%. So this is very good at keeping you close to the market when there's no outperformance that year by any 1 or 2 sectors, but putting you in a position to have an enormous year for when it does. So what the net of this is, over the past 7 years, the annualized CEF has outperformed the S&P by 7% with a little lower standard deviation, a little lower beta, and a little lower, as I showed you, maximum drawdown. So this is our alpha generator. What we use this for when we're managing accounts is most people that invest money have a certain chunk of that money that they keep in the market all the time. Typically, it's in the S&P 500. So what we do instead of that is we use this as kind of that dynamic piece that always stays in your portfolio. But instead of putting it in the S&P 500 and praying, we're always tracking those top 3 where the money is going. And this allows us to outperform on those years that sector rotation is lucrative. This is another thing that we do. This is our US versus the world model. And what it does is it shows us there's 25 different global equity markets here. This is South America. This is continental US. This is Western Europe. This is Asia Pacific. This is the Middle East down here. We got 25 of these, and they show us how the S&P 500 is doing versus these in 3 different time frames. Again, trading, tactical, and strategic. Those are the time frames that we kind of build everything around here. Right now, you only have Hong Kong, Taiwan, and UAE outperforming. But back in January of this year and February, we first started seeing relative outperformance coming out of Germany and Spain. And then we saw it in other places. I think the next place that went was South America. But the bottom line is when the S&P was getting smoked in February, March, and April, we had some money in some of these foreign equity markets. So some of these outperformed the S&P by 10, 12, 15% during that February to early April period before the market bottom. So this is what we use to tell us when we see that the Asbury 6 is red, when CPM is risk off and the market looks terrible, I'm looking over here to see where overseas that I can possibly hang out and have some fun while the S&P is getting beat up. So if you're a trader, you may not be somebody that's an international all the time, but to have something in your quiver that you can pull out when our markets are getting kicked around, there's some really good opportunities overseas if you use this at the appropriate time. It's not for all the time. This is our trading ideas. So right now, our trading ideas are built on that same 3 legs of the stool: trend, relative performance, and asset flows. So right now, we are in KCE and ITA. ITA is aerospace and defense. We were in that since May the 7th. That's what it looks like on a chart. So May 2nd is when we broke out. So we bought this a few days later. We're up 8%. And notice that the AUM has been expanding since August the 23rd or April the 23rd. That means new asset flows, fresh blood. People are willing to buy this and hold it overnight and assume the overnight exposure because they think this thing's going higher, and they're betting with their wallet, not just with their mouth. They're not just intraday. This is ETA again, been outperforming SPY since February the 25th. So everything I like here: trend breaking out, assets expanding, relative outperformance, very good versus the S&P. So we've got a nice lead here, and we will stay with this until our system tells us that it's time to get out. This is how we've done using this methodology, and this is how we see if our stuff's any good. I wish I remember the name of this program that we use because it's fantastic to tell us if our methodology works. So from the middle of March through of 2023 through beginning of April, every 3 months or so, we update this. We've had 96 trades. An average is about 4 trades a month. Net profit about $13,000. Average profit per trade is 1.4%. Our profit factor is 2.3. Our maximum drawdown is less than 3%. We're not risking really anything to participate in this. Sharp ratio is a very good 1.3. Our Sortino ratio, you can look this up on Investopedia, 2.4. Anything over 2 in a Sortino is exceptional. Percentage of winning. Here's the 2 you need to be concerned with. Percentage of winning trades, 54%. It's not very much, no, but it's better than 50%. And then the other thing is your ratio of your average winning trade to your average losing trade. Our average winning trade is 2.1%. Average losing trade is 1%. So we're making over twice as much on our winners than our losers. That's number 1. And number 2, most of them are winners. And we break this down even further. Here it is. Our average winning trade, rather, is 4.4%. This was the ratio that I showed you before. Average losing trade is 2.3%. We're in our average winning trade 18 days. We're in our average losing trade only 8 days. How can this help me? If I'm an options trader and I know that I'm right 54% of the time, and I know that my average winner is 4.4%, I can buy out of the money calls that all of the expense in a call typically is time premium. So I can buy something with less than a month less, or about a month till expiration, with the call price about 4% higher, or the strike about 4% higher than where the market is right now. Probably buy it for dirt cheap. I only have a few weeks left till expiration, and you keep doing that over and over and over again. And the ones of these that are going to work, you're going to make a lot of money really fast. So this is how some of our options people use this particular trade generator to find ideas with little to no risk when you got options going off the board in a few weeks and you're buying a strike that's 4% above the market. That's like trying to hit home runs. It's what people are doing and doing well with. We've got 4 different model portfolios that I'm not going to talk to you about, but what we in our money management, and we're managing money for some RIAs and we're managing money for a lot of individuals. We took all of these models and we broke them up into pieces and we made portfolios with them, kind of like making a stew, right? You put a little bit of this, a little bit of this, a little bit of that, and some of them are spicy, some of them are sweet, some of them are hearty, some of them are whatever. So you get the idea. But that's what we're doing now is we're using our models and putting in them with various increments. We're bringing in some ETFs that represent a short-term interest rate, and we're coming up with different strategies for different kinds of investors. As you can tell, I'm at 25. I'm not doing a lot of crypto right now, but this is what older, wealthier, and more risk-averse investors want, or just smarter investors. They want to know what the numbers look like. They don't want to see an upside-down squirrel pattern on their chart. They want to look at some numbers and they might go back a few years. So this is kind of how I have evolved from a seat of the plants floor trader that was going around and knocking heads with guys, for 17 years on the trading floor, to a much more numbers-driven, sedate. I've never slept better. The first 20 years, it's a wonder I didn't get a heart attack. Everything is calmer and cooler now because I rely on these numbers. Does that guarantee like a bond coupon, that you're going to get paid, next quarter? No, but it's rational, it's logical, and I can go back 7 years through a COVID, a 100-year pandemic, a major downtrend in 2022, a change from a zero interest rate policy to a more normalized interest rate policy, a situation right now out of the White House where there's another tweet every 5 minutes and the market's upside down. They're talking about tariffs, they're talking about trade wars. I'm able to push all that stuff aside, focus on the numbers. So I know I only got a couple of minutes left here. Investment research, we have a premium subscription. And I told you about the Substack, very cheap, very entry level. We've got some free stuff. Make sure you go to the YouTube channel for Asbury Research. The free Substack is there for you if you like. If you're looking for money management, most of you are traders. You probably don't care about money management, but these are, this is what we do. 250K is our minimum. It's 1% annual management fee up to $1 million. We use Charles Schwab. If you're a money manager, we also work with some TAMPs, and there's feeding the lawyers. Again, just a quick word on this, because it bears repeating. Past performance doesn't equal future performance. We back test the hell out of this stuff, and we're as meticulous as we can be, but nobody knows what the future is. Some people may tell you they know what the future is, but nobody knows. So please execute, caution, and understand that because something worked really well for 7 years, it doesn't mean that you mortgage your house and you push all your chips in there, so you can catch the next big move. This is like fire. It could either cook your food or it could burn your house down. That's what the market is to me. I learned that firsthand on the trading floor. So all of the the precautions here, and this is how you get us. Oh, contact us for a 10% discount on our Substack. It's $25 a month, whatever 10% off is. It's not a lot of money, but we wanted to give some offer here. We appreciate your time. I know I talked about really all I know, and that's how to do what I do. But I hope my evolution from where I started, as kind of a knucklehead on the trading floor to becoming a lot more of a cerebral type of a trader, and some of the tools we used, and the money ball analogy. I hope some of this kind of clicked with you, resonated with you, maybe gives you some ideas on how you might be able to also evolve, as you go through life with this. So with that, I'm done. I am going to turn it back over to Fausto. I got like 1 minute left. I don't know if you do questions, but thank you, Fausto. Thank you, Rich. Mazel tov.
No problem. Same here, John. Thank you so much. And from one Italian to the other, we had another Italian here today, from Italy too. But yeah, it's so funny how we're all in the same industry, and great stuff. I really appreciate you having John, and everyone. Just keep in mind, these are all being recorded. You'll be happy to watch them later. We'll have them up and running on our YouTube channel. And like I said, look, just a lot of great speakers, got great presenters. They're all great products. Try a little bit of everyone's stuff, and you know what? That's what trading's all about. You gotta learn before you can earn. John, thank you so much. And everyone, thanks for being here. We'll see you bright and early in the morning at 7:30 here in the trading room. And just make sure you subscribe to the channel, and we'll go from there. Thanks, everybody. Have a great day.